to 45-46 rally can be witnessed. At the current levels, the support is placed at 35 levels. So I will not suggest to book the losses on a very deep at such levels, but try to keep the stop loss of 35 rupees and hold your long positions. If the stock manages to give the breakout of 45 to 45 levels, then upside rally can be seen on the higher towards 250 to 54 levels. But you should hold the long position on every rise. You should sell this particular counter nearby 45-46 level so that your loss will not be faced as much. But you should hold this particular counter with the mentioned stop loss.
Okay. All right. And we've also been joined by Asta. Asta, thanks so much for joining in. We've got a caller, Dheeraj from Hyderabad, asking about Waaree Energy. And this is a counter that is in focus on the back of earnings as well. Let's see what it's doing today. It's up about 6% today as well. And it has gained quite considerably in the recent past. He's bought at levels of 2,480. Dheeraj, very good morning to you. How can we help you today?
Good morning, sir. I'm holding Waaree Energy
Yes.
at 2480.
Okay.
So today are the company's earnings actually.
Yes.
They declare their quarterly earnings.
Yes.
So can I hold it for some more time, or should I exit in the rallies is my query regarding the technical.
Yeah. It's a good question. Okay, so regarding technicals, okay. So Swati, I'm coming back to you. Of course, Waaree Renewables was in focus earlier last week on account of results, and Waaree Energy also gaining ahead of its earnings. Would you book at this stage or would you hold on?
Since today we have a result, so the volatile trading session is likely to be continued. But looking towards momentum, the counter is already 6.5% to 7% on the upside. I believe at least partial profit should be booked at the current market price, though the upside is very open for this particular counter. Nearby 2650, 2670 levels can be seen on the intraday basis as well. But at the current level, you should book your partial profits so that your half a profit will get in pocketed. And for the second half, you can hold on this particular counter with a trailing stop loss of 2500 rupees on the downside. For immediate target will be 2670 and 2700 levels on the high side.
Okay, all right. So that's a view on Waaree Energies. Let's talk about the next question, and it is for you, Asta. On the long-term basis, Bharat Dynamics is the name of the counter, and we've got Major Suresh Kumar Nair, who's got this question. Evidently, from his description, he knows what he's talking about when he's invested in the defense space, and indeed, he's making money on this as well. He's got a long-term view that he's seeking on Bharat Dynamics. He's bought at levels of 1,233, and he's holding 600 shares. He purchased in March, and this is, I guess, when the stocks were under a little bit of pressure. What's the view on the long-term basis? Because especially in the context of a reiteration by the defense minister of a 50,000 crore target in the next few years for exports. So we're talking about firing on both cylinders, domestic demand, of course, for defense, but on the export front as well.
Right. So regarding export, I would like to throw one point here is that they are having the estimated order book of around 200 billion, out of which export order book is at around 20 billion, right? So strong order book they are having. And what we are believing that in the results coming, we can see the surge in the EBITDA margin because of the niche technology on which they are working. So looking after all these factors, in fact, their Q3 performance was also on average mark. So looking together after all these points, I think, yes, it is a story to believe on for a long term. And I would like to recommend stay on for this counter. Initial price target can be set at somewhere around 1600 to 1700 odd levels.
1700. Hold on, Major, is the question. Is the view on Bharat Dynamics, and congratulations on having acquired it when you did. The next question is on Anant Raj, and Harsh Bhutra from Chennai is asking. He's bought at levels of 500. By the way, the earnings came through, and quite a bit of those gains, in fact, taking place today itself. So he's gone above his buy price today. I will remind you of the earnings. The margins have improved in the quarter gone by. They've come in at 26.3 versus 23.6, and there's an improvement to the extent of 51% in the net profit as well, and that is coming at 119 crore. The revenues increase by as much as 22.2%. So all told, a decent set of numbers. Would you hold on is the question. Asta, on the fundamentals, what's the view?
Yes, we have seen a very, very strong performance on this counter, especially in the time when we were quite skeptical about the data centers, etc., when the news broke few months back regarding the data centers. So I think that has a bad implication on the stock prices, and we have seen the stock prices nose diving towards southward directions. But now, what I believe is that with the kind of results which we have witnessed, they have seen a surge in their pre-sales as well. I think this stock is well poised to show more upside from here. Only the point is that it has already risen 12% in the last 1 week. But what we have seen is that the 40% fall from its peak prices. So definitely there's a scope for more upside from here. Our idea here is to stay invested in this counter with the initial price target of around 600.
Okay, all right. We've got a next caller. Okay, so that's the view on Anantraj. Hold is a view from Asta. Ram is calling us from Hyderabad on a stock that is in focus today, but has given up some of its ground. It's up only about 0.5%. In focus, of course, because of the safeguard duties announced 12% for steel companies. Ram, good morning. Thanks so much for calling. How can we help you today?
Morning, Alex. I bought this Tata Steel based on the news today.
Yeah.
So I was expecting at least 5% increase in the stock price, but it's not moving. That's why.
Yeah. So you bought it for a short-term trade, is it?
Yes.
Okay, got it. Ram, I will also draw your attention to the fact that some of these steel companies and metal companies have moved up very substantially in the recent past. And so maybe to a certain extent, one would say that that was already priced in. Remember, this is an announcement that came a little while back. This is the official notification. So let me get your question answered by Swati in any case. Swati, is it a case of a very sharp run up in these metal counters and now some of that steam is being let out? The potential upside from this stage is not very high. And would you suggest getting out before you see further drawdowns?
Yes, you have rightly pointed out that this news has already got discounted in the price because we have seen a very strong rally from almost 126 to 142 levels. Now the stock is just facing a very strong resistance of the short-term moving average, which comes to nearby 20-day DMA 140 to 145 levels. Today also on intraday basis, we have seen a 142 high, and thereafter we are witnessing some sort of a selling pressure or say the profit bookings at the resistance level. Since the view holding period is only for the short-term period of time, I will suggest to maintain the strict stop loss of a 137 levels on the downside. If it's break that level, then we are likely to witness some sort of a more selling pressure into this particular counter. Any move above 145 levels only will witness some sort of a fresh buying into this particular counter, and the target will be reach up to 155 levels. But since the overall short-term period he is looking for, I will suggest to keep a strict stop loss for 137 rupees.
Okay, all right. So that's the view on Tata Steel, and in fact the steel counters by and large are giving up. I'm just curious about SAIL. Let's pull up SAIL and see whether it's moving at all, because when the announcement was made, it was viewed as one of the big beneficiaries. And we spoke with a steel analyst earlier today, or metal analyst, and what he was pointing out is that the companies that focus primarily on flat-rolled steel are likely to benefit more, something like a Tata Steel, something like a JSW Steel, but as we've pointed out, it is likely priced in already. But let's talk about the next question. We've got Prashant tuning in from Bengaluru asking about Mangalore Chemical and Fertilizer. Is this a good time to enter? And what are the targets? Since he's not specified a time frame, let me go across to you, Asta. And once again, I think we're drawing attention to the chemicals and fertilizer stocks. Some of them have started moving. The question is, while we're not likely to see tremendous increase in volume, we are seeing some improvements trickling in on the operational metrics, right? So they're changing their mixes. They're trying to improve on margins and operational efficiencies. Would you hold on? Would you buy into Mangalore Chemical? What's the view?
So first of all, I would like to say that Mangalore Chemical results were on the decent side when we have seen them in the Q3 FY25. I mean, Q3 FY25 numbers were on the decent side. They have shown 21% rise in the profit. Now, the results date has not been announced as of now. So we are not aware when the results will gonna come. But yes, we are positive on the space as a whole. And yes, we can see some more upside in the margins in the space as a whole, because I think whatever going on at the macro level or at the global level definitely will help these chemical companies to show an outperformance. So definitely we are positive on this counter. The only thing is that we really need to closely watch when the results will come. Otherwise, our idea here is to stay invested in this counter with an issue price target of around 225.
25. But let me just prompt you and maybe give me a quick answer on this one, Asta. Based on the information that you have available right now, what would your top pick in the broader chemical space be?
Naveen Fluorine is our top pick.
And
undoubtedly, we find that counter to be very, very strong. So yes, Naveen Fluorine is something which is looking very promising to us, followed by SRF. So I mean, these are two counters in the chemical space we are positive on. But yes, we are positive on the fertilizer space also, although it is not related to chemical, but yes, we can say.
Yeah.
So their Chambal fertilizer is looking good to us. And one more point I would like to make, Alex, in the previous question, the viewer was asking that why the Tata Steel is not rising so much.
Yeah.
Because I think the expectation of these duty hikes were more. So it was around 20 to 25%, which these companies are demanding. Against them, they have got only 10 to 12%. So I think that expectation of hike was more. And in that case, the result or the outcome is not that very high. So that can be one of the reasons that why we are not seeing these stocks to be so much excited by this news.
Got it. Okay. All right. So, and thanks for that clarification, by the way. Do bear in mind that Asta just given you her view on both chemicals as well as on steel companies, speaking about why they have not reacted maybe as much as some had anticipated. Hari is calling us from Chennai to ask about Tata Consultancy Services. Hari, very good morning to you. You're holding at a price of 3,920. Can you help me understand what the thesis was when you bought and what was the time frame that you had in mind?
Hi Alex, good morning. It's nice talking to you. Alex, in the IT pack, I saw TCS and the Infi are the bigger ones. I have holdings in both Infi and TCS, and I'm looking at a long-term perspective, maybe 3 to 4 years or something. Now my question here is, I bought it around 52 weeks high, and I bought on all dips kind of. So my average is around 3,900.
Yeah.
So I'm not going to sell the stock. I just want to hold it. Maybe at current phase, I'm looking for 4 to 5 years of holding. But my question is whether I can accumulate at this level. The reason I'm asking is overall the IT pack is not doing good, and there are a lot of news coming from US.
Yes.
Can we take advantage of this, or maybe it's whether I need to wait for some more time to see how things are settling down?
Yeah, that's a fair point. And you've got both TCS and Infi. Let me go across to Asta. Asta, of course, at this juncture when the entire pack is going through this elevated level of uncertainty, of course, existential questions also start getting asked. In fact, I will draw your attention, everybody, to a show that my colleague Tamanna did yesterday, and the question she was asking was whether or not a pivot is necessary for IT companies to really move out of this logjam that they're facing. And I think she was speaking to Mr. C.P. Gurnani, who said that this is a cold that the industry is going through and not typhoid, and so they're going to be able to get past it relatively quickly. I will encourage you to watch that. It's the big question. It's available on YouTube. But what's the view, Asta? Would you hold on to TCS and Infi?
Yes, I would like to say that one can remain invested in this counter. Now, talking about TCS in particular, there were 2-3 points. First of all, international business grew of around 0.6%. Secondly, strong deal bookings they have witnessed of around 12.2 billion, which is again up as compared to last year. Thirdly, no major project cancellations. Fourthly, they are moving towards Gen AI projects, etc. So, I mean, these things, I have taken these things all from the management commentary, but I'm finding them optimistic. But right now, the kind of scenario is such that some uncertainty lies. So, idea here is just to hold on, but to accumulate at this point of time, I say no. I think we can see some more downfall from here, especially in the case of TCS. So the chances of accumulation one will definitely get, but at the lower prices. not at the present moment of time. Even Swati can just confirm that thing if I'm wrong, because I think this stock can fall down more. So accumulation definitely can be done in this counter. After all, it is a leader. So no worries on that part in the longer term, but in the shorter term, it can witness more downfall. So yes, you can accumulate this counter, but not at the current level, maybe at the lower levels, which Swati can tell better.
Yeah. Let me go across, and it's a good point to make, Asta and Swati. Yesterday, everybody was a little flummoxed, if you can call it that. We were certainly scratching our heads, wondering why the IT pack on the back of Infi results, Tata Elxsi gaining as much as 9% after what was a pretty weak set of numbers, and we saw the delivery stats. Right, it's not like there was tremendous delivery buying. If I remember correctly, it was only double digits, and that too maybe even teens, 11%, 12% or so for Tata Elxsi. So short covering evident. What are the near-term triggers and what are the levels to watch out for TCS Infi?
Yes, for the TCS, definitely, this is also the right point to take long positions for a long-term horizon purpose, because daily charts suggest a positive divergence, and we have seen that the stock has managed to maintain the 3,000 levels, which has been tested in the 2024 level. So that level has been tested, and from there onwards, we have seen a very good bounce back rally, minimum towards 220 DMA. So I believe, yes, if you're looking for a longer-term horizon, at least for 3 to 4 years time period, then one should take a long positions at the current market price, not more than 20-30%. If you're getting any dips to back towards to the 3,000 and levels, so then you can add on. So the overall setup has been, just as of now, we are witnessing a time correction into this particular counters. Over a period of time, I'm looking for a target of 3,700 to 3,800 levels in the TCS. So this will also be the right levels to take a long positions, not more than 20-30%. On the Infosys as such, I can say that you should wait for this particular counter, because as of now, the bottom is not finding out in this particular charts or weekly or the monthly as such. If you're getting any dips towards to 1,300 and so levels, so that at that point of time, the risk reward ratio will be literally favorable. So I will not suggest to take a long position into the Infosys at the current market price, but any dip towards to 1,200 levels, that can really act as a very strong buying point levels. And for an upside, we are looking for a bounce back rally towards to 1,600 to 1,650 levels. So those are the targets we are looking for a medium to short term period answer into both the counters.
Okay, so comprehensive view on the large cap IT space. And remember, this is a pack that is going to remain in focus because you have mid cap IT that's going to be reporting its numbers. Quite a few of those stocks going to be in focus together. I think 5 companies on one day, if I'm not mistaken. All right, we'll keep a watch on that. Rajesh Maheshwari has got the next question. He's writing in from Indore. Rajesh, you're back from Singapore seemingly, and asking about Globus Spirit. He's got 125 shares at an average price of 1,197, and it's a long-term holding. What is the short to medium-term outlook on the stock, and what is the most prudent course of action? And he's wondering from a strategy point of view, Asta, on the fundamentals, would you hold on to Globus Spirit?
See, short to medium term outlook is not so positive unless I don't see the results, because what happened in the previous results, there was a loss. If I take all the other income and extraordinary items, then it seems to be a loss in the bottom line. So that markets never like. So my outlook really depends on now the results which this company will be giving, because I'm not aware. I think they have not given their Q4 earnings as of now. So just wait for those numbers to come in and then make any sort of strategy in this counter. Meanwhile, one can remain holding this counter. This is what we are suggesting right now.
Okay. All right. So that's the view on Globus Spirit. We've got our next caller, Deep, who's calling us from Kolkata. Deep, thanks so much for calling. I believe your question is on Dixon Tech. What do you want to know?
Yeah, actually, good morning. And
Good morning.
I bought five stocks a week back, and I'm planning for a short-term hold. So is this the right time to sell it off, or should I wait for some time more?
Wow, what an acquisition price. I must congratulate you. You've made quite the acquisition. And did you have something in mind in terms of target or what?
Yeah, actually, since it went up higher in the previous years, previous time also, so I thought maybe 18,000 would be a good level to sell off. But right now, since the markets are so high, I'm kind of in a panic mode if I should sell it right now or wait for a bit longer.
Yeah, I mean, it's better to it's a good problem to have. You're in the green, you're making a profit, and you're wondering whether to take some money off the table. Okay, so Swati, it's better than wondering how to curtail your losses. Would you take money off the table right now?
First of all, congratulations, Dips. You have bought at the exact support levels. So that's why you are enjoying a very good handsome money. Definitely, you should at least book your partial profits because within a span of a 7 to 8 trading session, you have seen a very good amount of profits. So partial profits are recommended at the current market price. Second partial, you can hold on. 16,000 will be the first psychological support level. So by keeping that as a second stop loss, profit stop loss, you can carry the long positions. I believe the stock has a potential to reach up to 17,400. That is the likely target we're likely to see in the next week. So at the current market price, book the partial profit. Second partial, you can hold on with a stop loss of 1,600 for a upside target of 17,400.
Okay, all right. So there you go. It's not an 18,000 target on Dixon Tech, but well, it's upside potential nonetheless. It's up and about in trade today, 5%, quite the pop. Hopefully that answers your question. By the way, on the other side of this very quick break, we've got a very interesting question from Santosh. He's got BLS International shares at an average price of 0 rupees. We'll talk about how that is on the other side of the break. Do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास पार हो या नियर सब कुछ दिखे क्लियर.
The second buy pick is a Naukri Info Edge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Hi, welcome back. You're watching Ask Profit, and this is a show that gets you answers to all of your stock-related questions. I told you there was an interesting question that came through from Santosh, and he's writing in from Chennai. His acquisition cost for BLS International is 0, and it's actually not very complicated. Ultimately, he's gotten 20 shares. He got a couple of bonus share issues, and ultimately, as a result of those bonus share issues, it went up to from 20 to 80. He sold 60 shares, so the original 20 remained, and he has basically recovered his acquisition cost. So acquisition cost has dropped to 0. Profits are 8,000 rupees. He's asking about the future prospects. Should he hold or sell for the long term? Asta, what's the view on BLS International?
So yes, hold, definitely hold, because first of all, results they have posted exceptionally well. Their visa and consular segment is really performing well, and in fact, with the kind of acquisitions they have done, balance sheet is also is in a very strong shape right now, nice shape I should say. So there is no reason to get out from this counter. And what we have seen that this company is performing exceptionally well, especially when the transition happened from the partner-run model to self-run or self-managed model. So that transition really helped the company in posting good set of numbers along with the kind of acquisitions they are continuously doing. And yes, this company has announced bonus twice, I think one in 2017 and another in 2022. So in that way, definitely the cost price comes to almost nil. But idea here is to stay invested in this kind of a stock with a price target of around 500 at the initial levels.
Okay, all right. So 500 should be your target on the initial levels. BLS International is a hold, according to Asta, based on the fundamentals. Let's take the next caller. We've got Shankar calling us from Bengaluru. Hi, Shankar. Good morning. How can we help you today?
Hi, sir. Good morning, sir.
Yes. Good morning. Please go ahead.
Stock name Unominda. Stock 150 stock. Average price 890. Profit 2000. Hold or sell, sir?
I got your question very clear. Thanks, Shankar, for getting us that or for asking that question. Unominda from the auto ancillary space, and Asta, really the question is whether your view on the automotive suppliers is positive or not. Unominda, one of them, bought at levels of 890. Would you hold for the long term?
Yes, I would like to recommend a hold on this counter, although I know the kind of uncertainties which are prevailing in the market regarding automobile industry as well. But this counter is something which is, I believe, can show and can come out of all these and can show very strong performance going ahead. Now, talking about the fundamentals of this counter now, they are definitely into the automotive system. They are supplying to some major key OEMs. And we believe, in fact, some management change has also happened in the past, I believe. And I think all these changes which has happened to this company are poised to show some more good returns from here. So stay invested in this counter. Maybe time horizon can extend from 6 months to 1 year because of the kind of uncertainties which we are into right now.
Okay, all right. We've got an interesting question up next as well. So that's a view on Unominda. But we've got BEL from the defense pack, and we've got Venkat from Andhra Pradesh, who has said that he's acquired a sizable quantity of BEL, 10,000 shares at an average price of 279 per share. And the stock is currently at 300, and so for an acquisition cost of 27.9 lakh, he's making a gain of 2.5 lakh. He's asking whether to hold from the perspective of 6 months or thereabouts or not, or exit at the current level, take money off the table. Swati, this is not a very sizable portion of his portfolio, in that it's about 5% is what he's clarified and told us. So he can, I guess, hold based on risk reward. Would you say that he should, and what are the key levels to watch out for?
My view on this particular stock BEL is bit positive. The stock is on the verge of giving the breakout of 305, 306, which was acting as a previous cluster resistance zones. Any move above that level will see the extension of this positive rally towards to 320 levels. So up to that level, I'm looking for a target on the higher side. Since the his buying price at the lower levels, I will suggest to hold on by keeping a strict stop profit stop loss of 295. Hold your long positions for a target of 320.
Hold is a view on BEL, and Swati's got a positive view on the stock. 300 is the current market price. It has moved up quite substantially along with the rest of the defense pack. We spoke about that with regard to BDL, Bharat Dynamics as well. Okay, we've got a next caller, Rohit from Bengaluru, and Rohit wants to know about Sagility. Rohit, relatively new listing, what drew you to it?
So I work in the same sector, Alex, but for a different company. So I understand, and my company also have the same client base as US.
Right.
So and they have very strong fundamentals, and the results that followed up were very good. So that's why I got into this stock.
Okay, and so what do you want to know? You want to know about the long-term prospects?
Right. So currently, considering the US tariff wars that are going on, this stock has fell from its high. So I just want to know whether I can hold or should sell, or I can re-enter later, or basically a long-term view on this.
Yeah, and you said it. It's got primarily US-based clients in the segments that it operates in, and so therefore, Asta, the question really is, can it withstand the current uncertainty? How does it emerge on the other side? Because a lot that is happening right now, particularly with regard to the bilateral agreements that are in the works, perhaps everybody's watching this meeting between J.D. Vance and the Indian administration. Apparently, he met the Prime Minister yesterday as well, Prime Minister Modi. What would you say about Sagility? Recent listing, hold on?
Yes, I would like to recommend hold on this counter. Yes, the recent listing listed in November only at a issue price of around 28 to 30. They have come at the price band off, and we have seen a good jump from there. So they provide technology-enabled solutions, especially to the US healthcare industries. Yes, we know that some sort of uncertainties are there, but if we see their previous commentary, management commentary, they are quite optimistic. In fact, they have onboarded various new logos, etc., and they have done certain acquisitions also. So I believe the kind of work which is going on in the company, so they are all set up with their plans. The only thing is about the macro environment, and this is not related to this particular company. It is related to the every other company which are working in the US right now. So I think just give some time, and things or this dust will definitely get settled down. Idea here is to stay listed in this counter. Initial price target we can give to this counter is 48 rupees.
48, so not too far, a cautious approach. And ultimately, you said it, you've got to wait for the dust to settle. Hopefully that answers your question as well. Interesting question on the banking space, and this one's from Satish. Between a Bank of Maharashtra, which a lot of watchers of public sector banks have identified as a stock to watch, and Axis Bank from the private sector play, which one would you pick at this juncture for the long term? And you know, because banking is in focus, let me get a quick view from both of you. Swati, on the charts, Bank of Maharashtra and Axis Bank, which stands out to you as a better pick?
I will go for with the Axis Bank, because the way this particular counter gives a rally, we can't compare it with the Maha Bank. It's a small bank, very slowly and steadily it will give a returns. No wonder the view is not much negative, but if you want to earn the fast money, I will go with the Axis Bank, because this is the counter, index-based counter. Whenever the bank nifty will show a spectacular rally, this will participate in those rally. Don't buy at the current level. If you're getting any dips towards to 1100 and so levels, definitely you can go for a long position. So if you want to do comparative analysis on the chart also, Axis Bank charts looks really good, and we are looking for a target of 1500 and so levels over a period of time. So I will go with the Axis Bank.
Okay, Asta, is that the view on the fundamentals as well, or would you pick a third bank?
No, both banks are looking good right now. So that is in the public sector bank, my Bank of Maharashtra, and it is in the private sector bank. But yes, if anyone has to compulsorily pick up only one, then I would like to go with Swati. Bank of Maharashtra is my second choice. First, I would like to go with Axis Bank. Although Bank of Maharashtra, we are expecting their CAGR growth of more than 10% in the AUM. But the kind of portfolio which we are seeing in the Axis Bank, I find it more, comfortable. I'm more comfortable with that kind of portfolio, which is now moving towards more retail deposit, etc. So idea here is, if anyone has to go with a single bank, then Axis Bank is the choice. Otherwise, both of these counters are looking good. Bank of Maharashtra can ultimately go till the level of 55 to 60 in the longer term. However, Axis Bank being the preferred choice, we have a target price of around 1400 to 1450. And with one disclaimer, this counter we might hold in our PMS services as well.
Which one? The Axis Bank, right?
Axis Bank, right.
Okay, got it. All right. Our next caller is also asking about the financial space, and Raju Reddy is calling us from Bengaluru. Hi Raju, good morning to you, and you want to know about Bajaj Housing. You've bought a very significant quantity. Can you help me understand what the thinking was? And because you bought so much, despite the fact that it's at just a 2 rupee difference in the price, you're losing quite a bit of ground. Did you acquire this at once or over a period of time?
Period of time for long term, sir.
Okay, I got it. But did you buy 90,000 shares at one go, or did you acquire it over?
At one go, sir.
Okay. And what was the thinking, Raju?
Sir, this parental company is a good company. So I am planning for 10 years, sir.
You're planning for 10 years?
Long term.
Okay. Do you own any other shares, Raju, or this is the single share that you own?
No, I have 60 shares, sir.
Okay. And what price do you remember?
I bought 3,000, sir. 3,200 or something.
Wow. Very good. When did you acquire this?
This and all before 2 years back I bought it, sir.
Okay, okay.
Then Dixon Technology, I bought nearly 6,000 rupees, 25 shares I have, sir.
Wow.
This is around 3 years back I bought it, sir.
Okay, okay. Congratulations. So you know how to pick them, Raju. Okay, so let me go across to Asta on Bajaj Housing Finance, and he's taking an oversized bet on Bajaj Housing. I don't need to stipulate what his thinking is. He's trying to get in early and he's holding for 10 years. As he's displayed with his buy of Dixon Tech, as he's displayed with his buy of Trent, he's making a sizable amount of money in both. But he's got 90,000 shares of Bajaj Housing. What's the view?
So view is positive. First of all, good AUM growth, which this company has posted. So I believe they have posted the AUM growth of more than 20%, maybe 25, 26%. And in fact, their ROA and ROEs, because these ratios which I'm talking about, they hold key importance to any NBFC. So ROA of around 2.4%, ROE of around 11%. Good growth figures. The only problem is with the valuation, and I think that was the major reason we have seen beating down also in this counter. But going ahead also, since 56% of the portfolio is coming from the home loans and the kind of environment which we are into, where the interest rates are now we are seeing on the downside, definitely these NBFCs are well poised to show more upside from here. No need to worry. I think remain invested in this counter, and initial price target which one can set is at around 150 to 160 odd levels.
So don't go by that loss number. Of course, Raju, you don't need me to tell you that. You clearly know what you're doing. For the viewer though, just take a look at the number of units Raju has acquired. 90,000, right? So ultimately his buy price is 1.2 crore. And on that, he's losing about 1.6 lakh. Not too much if you think about it. And he's made okay. While sensibly, a lot of people talk about having a lower concentration risk, but this is not a bad company. It's got a proven track record, and he's taken an outsized allocation towards one company. It depends on what your strategy is. So bear in mind, he's taken an outside position. Maybe that does not fit for you. We've got the next question. Smriti from Bengaluru is asking this question. She's got a question on Newland Laboratories, which she's bought 16 shares of, and at a price of 5,362. She's asking whether to book profits or to hold for the long term. She's making a sizable gain here as well. 1.25 lakh is the profit. Swati, would you book right now?
I will suggest to hold on, because this particular counter on the weekly chart is on the verge of giving the symmetrical triangle formations. So whenever such kind of a formation breakouts we get, definitely we are likely to witness a very strong upside, nearly at least 5 to 10% from here onwards. For a short-term period of time, I am looking for a target of 14,300 levels. Beyond that level, 15,200 levels can be seen. Since the buying price is at the low price, we can take a risk of standing out at the current market price. So hold your long position if you want to keep a profit. Stop loss with 12,500 is the crucial short-term support level. So by keeping that as a profit stop loss, you can definitely hold on your long position.
Okay, all right. We've got a next caller, and Murli is calling us from Bengaluru. Murli, very good morning to you. You want to know about Just Style, right?
Yeah.
Please go ahead.
Good morning. Yeah.
Good morning.
Yeah, I bought 1100 shares of Just Join at 1234.56.
Okay.
The last October I bought.
Okay.
And being a Reliance change of management, and they are yet to come to the dividend list, and they declared a very good result in the fourth quarter now.
Yes.
What are the future projects can I hold, because I'm incurring a loss of 2.5 lakhs?
Yes, I can see
and
that.
Being a Reliance stable, I thought some point of time
it'll turn around.
Strong management and they'll do something.
Yeah. Okay. So decent thinking, and in fact, you must have seen a sizable pop in yesterday's trade as well, because this is one of the stocks of the day yesterday, Murli. Let me get Asta in on this one. Asta, Just Dial, decent set of numbers, as Murli pointed out in the fourth quarter. Would you hold on? His buy price is 1234.
Yes, definitely, because the numbers were really good. And the most important feature of these numbers is they're the unique visitors, which have risen by around 11%, I suppose around 198 million. In fact, the active listings on has also shown a growth. Pardon me. So I think this counter is well placed to show more upside from here. Definitely the cost price is high, but I think in the longer term, we can see his cost price also remain invested in this.
In Just Dial is a view from Asta. We've got Dr. Vijaya, who's asking the next question, and she's bought Cera Sanitaryware 5 shares at 7,000 rupees. The stock is currently at 5789. This is for a long term. She's wondering whether to add at the current dip or to avoid, and maybe also to exit if that's the view on the charts. Swati, on the charts, what's the view?
The view as of now, we already have seen a very sharp correction from the mid of 2024 onwards to now mid of almost 25 levels. Now at the current levels, I believe that we already seen the price correction. Now the time correction is likely to be going on. Stock will be under the consolidation phase for a few weeks and so, and then onwards we can witness some sort of a reversal into this particular counter. Since the buying price is very at the elevated levels, I will suggest to average it out at the current levels. Average not the exact 50% quantity, but 20-30% can be added at the current market price, because we are likely to witness some uptick rally towards at least 6100 to 6200 levels. Up to that level, we are looking for a upside rally. So definitely you can add on few more stocks at the current market price. For a short-term period of target will be 6200 levels. Beyond that, 6500 levels can be seen. If you want to keep any kind of a stop loss, 5500 is acting as a very crucial support level provided by its 20 days moving average. So by keeping that stop loss, you can hold on the long positions.
Okay. All right. So that's the view on Cera Sanitaryware, up about 2% in trade today. Rakesh is calling us from Hyderabad. Good morning, Rakesh. How can we help you today?
Good morning, Alex. I'm holding 5-star business at the rate of 706 rupees.
Right.
I'm tracking this stock from long time, and it is going up to 848, and it is lowering down again to 700 rupees. Whether I want to hold or book some profits there.
I got it. Okay. And what is the time frame that you had in mind?
Initially, I bought for a longer time, but I'm looking to book profits now.
You're looking to book. Okay, fine. All right. By the way, it's engaged in the micro lending space, or the micro entrepreneurs and self-employed individuals, and we're just about seeing a bounce in that segment. So you might want to watch that as well. But since you're asking for a short-term view, let me go across to Swati. Swati, on the charts, he is making a small profit at this juncture. Should he book?
Alex, if we look towards the weekly chart or the daily charts, the stock has already given a very strong rally from almost 650 to 850 levels now. Current 200 points has been witnessed. Probably we might witness some sort of a profit bookings at the higher level, but the overall view is definitely positive. I'm looking for a target of 870 to 900 levels on the higher side, but the client is looking for a very short-term period of time, and we might witness some sort of a profit booking at the higher levels. I will try to convince him to book the partial profits at the current level, so that your at least buying price will cover up. So by keeping profit stop loss of 820 rupees on a downside, you can hold on your second partial quantity for a target of 900 rupees on the high side.
All right, so that's a view on 5-star. A lot of questions on the financial space, understandably, because the space as a whole has done particularly well over the course of the last few sessions. I think over 12%, 13% for the Bank Nifty in just a few sessions, 5 or 6 sessions. Okay, Abhirami is calling us from Chennai. Hi Abhirami, how can we help you today? I think you want to know about Bandhan Bank, right?
Good morning, sir.
Good morning.
Sir, I buy Bandhan Bank 175 my LTP, 350 shares. I can hold for short term, sir. What is the target for Bandhan Bank?
When you say short term, have you defined that as 1 month, 2 months, 3 months?
Sir, 3 months, sir.
3 months, all right. All right. Swati, on the charts, Bandhan bought at 175. What is the potential upside for 3 months?
The potential target I'm looking for 185 to 190 levels. Up to that levels, you can definitely witness the long positions, but not at this speed. At this speed, whatever we have seen in the last few trading sessions, because the Bank Nifty is trading at all-time high levels, we might witness some sort of a profit bookings at the current market price as well, nearby 175 levels. Then retracement levels can be seen up to 155. Then onwards, we can in the pattern of the high tops, high bottom formations, we are likely to witness the uptick rally, but definitely for a short period of time, my view is definitely positive. 185 to 190 levels I'm looking for a target. The immediate support lies at 155. So as long as the stocks maintains the 155 levels on the closing basis, the view will remain a positive.
Okay, all right. So Abhirami, hopefully that answers your question. It is time now to take a few more questions on WhatsApp. Anthony Waste is the name of the counter that we're taking next, and this is a question from Mahendra Raj. He's bought at levels of 624 and the stock is currently at 520. He's looking at the long-term prospects. He's looking to hold for the next 6 months and whether or not to do so or book losses. Swati, on the charts, what's the view?
My view is not that much positive in this particular counters. As of now, the stock is currently trading at around 520 levels, and so downside is a very good support of 500 rupees. So as long as it's hold that level, we are likely to witness some sort of a pullbacks, but those will be a very short-lived. So sell on buy strategy should be applied. On the high side, 540, 550 levels can be seen in over a period of time. So once the stock manages to reach that level, try to exit your long positions.
Okay, Richie Lalu from Kerala is asking about Premier Explosives and whether to buy at the current price. He wants to deploy as much as 2 lakh rupees. Stock is currently at just under 400. Swati, what's the view?
My view is not that much positive in this particular counter. If you want to invest the same principal amount, try to find out the another counters such as the Balrampur Chini really looks very good at the current market price, United Spirits. But premium exposure, I believe that the upside is very limited. It will go up to 420, 430 levels. And the risk reward is not favorable. If you're getting any dips towards to 375 to 380, that will be the attractive level to take a long position into the this particular counters. But apart from that, if you're looking to invest at the CMP, United Spirits and Balrampur Chini looks attractive on the technical fronts.
All right, it's time now, ladies, to hit the rapid fire segment. And you know what this means. I'll toss as many questions at you over the course of the next 2 minutes. Do keep your answers as short and as cogent as possible. The first one is from Vijeta from Kolkata, asking about Dr. Reddy's Laboratories. 3 to 6 month view is being sought. She's bought already at a price of 1,162. Should she hold on? Swati, what's the view?
Definitely should hold. I'm looking for a target of 1250 to 1300 on the higher side. Downside, it has a good support of 1120. So by keeping that stop loss, you can hold the long position.
Okay, CA Yogananda Naidu is asking about IndusInd Bank, which he's bought at a price of 750 and is currently in profit. Should he add more or should he exit? Asta, on the fundamentals?
Don't add more at this point of a time, and if risk capital is not high, so book partial profit also.
Okay, Satyan wants to know about Vedanta. He's been holding for 8 months at a price of 460. He's looking for the next 4 to 6 months and his target was 550 on the charts. Is that possible going forward? Swati, on the charts.
The 500 target will be possible, but before that 470, 460 levels can be seen, which are the previous resistance levels. So up to that level, I'm looking for a uptick rally. Downside, it has a very good support of 400 rupees.
Okay, Jay from Bengaluru wants to know about Bharti Airtel. Is it a good time to enter at the current market price? How does it look for the long term? Asa, on the fundamentals, would you buy?
Oh, yes, definitely. One can make an entry at this point of time also. Long term is looking good with a price target of 2,000.
Okay, Venkatramana, unfortunately we couldn't take your call, but we did address Bank of Maharashtra. I'm saying this right now. I want to reiterate, he's on the call for 20 minutes. I'm so sorry you had to hold, but I'm going to ask Asa to reiterate. You said buy on Bank of Maharashtra, right?
Yes, Bank of Maharashtra was also looking good.
Yes.
And here the price target can be 55 to 50 levels.
Okay. Hopefully that answers your question, sir. Apologies to keep you on the call for so long. CAMS is the stock that we're talking about next. Should it be bought at the current market price is the question Sanjeevi wants to know. Ask Swati on the charts.
It's definitely 20-30% can be accumulated at the current market price. If you're getting any dips towards 230, 637, you can add on. We are looking for a target. Initial target will be a 4,500 and beyond that 4,800 levels can be seen.
Okay, all right. Asa and Swati, thanks so much for answering all the questions that you did answer today, and we've covered quite a bit of ground, so appreciate that. All right, it's practically impossible to answer all of the questions that we get over the course of a 1 hour time frame, but we do our best. If you've not got your question answered, then there's the program in the evening, or we'll be back tomorrow to take more of your questions. In the meanwhile, I hope that the stocks that we discussed today and that we will discuss over the course of the day will help you out. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The second buy pick is a Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company? Hello and welcome. You're watching Know Your Company. Today we're going to be covering Ashiana Housing. Real estate play, of course, and an interesting one. It's a sub 3,000 crore in terms of market cap. And what I want to know and why we're featuring Ashiana Housing today is I want to try and understand. They've come out with their provisional numbers for FY25. There's been a slight bit of a miss in terms of that number. So whether there are any regulatory and approval challenges which are cropping up with regard to this company in particular, with regard to existing projects. That's the first piece I'm going to try and zoom in on. Second one I want to really understand is with regard to pricing and outlook for FY26 and the near term thereafter, whether there has been a significant shift in terms of either of those metrics, demand and pricing. The third piece I want to understand is they have around 2,100 crore of GDV which needs to get executed, which is roughly 49% of what has already been received by them with regard to this execution of GDV. GDV being gross development value, and therefore all the development that they're doing should lead to some amount which is 2,100 crore to be recognized in the near term. How quickly are they going to recognize that? The approval status of existing projects, whether there are absolutely any approval delays that we are seeing at this point. I want to also understand the cumulative gross development value currently, because that as of now is not available in public domain, something I want to understand. New projects which are being considered going forward, what are the growth levers and how is that looking? Mind you, roughly 11,000 to 12,000 crore of execution is what they've guided for. That will come as part of our analysis, but that's something that you should know, given the fact that we are looking at the gross development value in cumulative that they are currently sitting on is what I want to understand. Now, the last piece is with regard to capital allocation. They're sitting on some amount of cash. They're also sitting on some amount of debt. The debt number, frankly, is very low. How are they incrementally allocating capital, and therefore what are the return ratios at which they are deploying capital is something I want to understand. So those are some reasons behind why we're going to be zooming in on Ashiana Housing today. Interesting play in the real estate space. Let me start off by explaining what the company does. In terms of Ashiana Housing, it's a mid-sized real estate developer, and it was incorporated in 1986, listed on the BSE in 1993, and thereafter listed on the NSE in 2011. It's specializing in residential projects in Tier 2 cities. It's a prominent player in developing housing for senior citizens. Now, in terms of segments, they are into the kid-centric home segment. They are into senior living home segment. So this is one real estate player which is developing a niche of sorts within these pockets. Premium homes is the other place where they are playing, and elite homes is where they are playing. So those are the 3-4 clusters that they are currently focusing on. A really wide geographical presence. Now, again, this is unique from a small developer perspective. Not too many small developers have such a wide range in terms of geography that they cover. But just look at some of those names, all Tier 2 plus cities. So again, it's Tier 2 plus, it's wide ranging, and it's in these specific pockets that they operate in. Something that you should keep in mind as we speak about the company even as a whole. That's the future projects, that's projects in the pipeline in terms of saleable area, but the gross development value of those projects will be crucial, and we'll understand that when we speak with the management. Now, in terms of what are the KYC metrics that we'll look at when we're speaking about Ashiana Housing. And I'm going to start off with the first metric, which is operational metrics, which we generally look at in real estate companies. Thereafter, we look at income statement and cash flow. We'll combine those two metrics. Balance sheet is the third metric, and return ratios is the fourth. Thereafter, we look at shareholding pattern. We look at street cred. We look at the outlook going forward, what the guidance seems to suggest. And last off, we'll compare the valuation at which this currently sits at versus some of the other players that are there in a similar market cap kind of space. So that's how we've kind of split up the metrics, and we'll hopefully dissect all of that for you by the end of this this show. Now, in terms of who's joining me, we have Anushi Vakharia joining me on this show to try and break these metrics down. Anushi, firstly, welcome. Good morning. wanted to first start off with those operational metrics that we always look at when it comes to real estate companies.
Of course. So before we go with the income statement for real estate companies, it's important to focus on how the booking values have fared in terms of how the area booked has looked at. So if you see the growth in the last 2 years or so, we've seen at a muted growth of around 2% in terms of how much area has been booked. We saw in FY25 this number standing at about 26.97 lakh square feet. While in terms of value of area booked that we are looking at, here we have seen improvement in terms of where the land value is concerned. We are looking at a growth of around 8% in FY25, of course, aided by higher price realizations as well. In FY24 and FY23, there had been a substantial pickup in terms of these growth numbers that were there, around 37% of a growth last year. So overall, this is the picture that we are seeing over the last 4 years or so. But let's also talk about the fourth quarter, what has panned out for the company. In terms of area booked, we're seeing about a 20% of a dip in this number. While if you look at the value of area sold, that stands at 574.7 crores, seeing about a minus 33% of a dip as well. Do note that the company had guided for a 2,000 crore of overall pre-sales for FY25, of which it was shy of by around 63 crore. It reached a pre-sales number of 1,937 crore. So in terms of where the key operational numbers are looking at, that's what we are seeing. But Harsh, let's also talk about the income statement, right?
Yeah, let's do that. And it's not a very impressive looking income statement, also from a perspective that you will likely see that for real estate players, the execution is chunky. So something to keep in mind. FY25, and I'm looking at the numbers, not impressive at all. In fact, trailing 12 months, FY25 ended 9 months, which is not reflecting in the graphics in front of you, is just about 600 crore in terms of top line. But outside of that, it's grown at a fairly healthy clip of a low base. Mind you, for a 3,000 crore market cap company, it's doing about 1,000 crore in profit after tax. The EBITDA margins have gone up from 7 to 10 odd %. And the net profit also has gone up in similar kind of stead, as you can see. And for FY25, as I did mention, not a very impressive set overall, at least up to 9 months. So some bit to be done, some room to be left with regard to execution. And that's something, of course, we will ask management as well. So that's on the income statement. Let's look at the CAGR. And again, it's a 3-year sales CAGR of 57% off a very, very low base, and a 3-year profit CAGR of 147%, again off a very, very low base. And loss making as well, in fact, a couple of years back. So something to be kept in mind. When you're looking at the standalone numbers for 9-month FY25, you can see revenue is in fact down 52%. EBITDA is loss at around 50 lakhs odd. And you have a net loss which is at around 2.1 crore, which has been clocked by the company. Now, so of course, that's the income statement. Let's also look at the cash flow while we are at it, because this kind of unimpressive number largely not translating to cash flow. Cash flow is reasonably better in that sense. As I did mention, when income statement is concerned, you will largely see it chunky. Cash flows may be the better way to look at it, but you would want a faster growth on a lower base where the cash flows are concerned. In fact, H1 FY25, the cash flow is negative 2.6 crore, and the net cash flow is of course looking positive at around 86 crore, which is in front of you. So that's how it's stacking up. We'll give this metric a neutral for the moment, both the income statement as well as the cash flow. You want to see more execution, and you want to see on this base whether Ashiana Housing can continue to execute. That's really the question. Anushi, balance sheet.
Right. So if you're talking about the balance sheet, let's just segregate it in two parts. If we take the equity shareholders fund in consideration, the equity share capital roughly to the tune of 20 crores. So considering reserves and other factors also, we are seeing at an overall unchanged value of 754 crore. This is the end of 9-month figure that we are looking at. But considering debt and cash flow position, it's a healthy picture that we are seeing. Cash, of course, eclipsing what the debt picture is. We are company currently sitting on a cash of around 343 crore, higher than that of the debt of 256 crore. In fact, when also asked about what their future plans are on the what the future plans is as per the earlier conversations, the company does not want to do fundraisers as well. So we are looking at a healthy picture in terms of the net debt picture that is there for the business, right?
Right, absolutely. And they're doing roughly 100 crore, at least in a normalized year in terms of cash flow as well, Anushi. So believe that should not be a concern. Let's look at return ratios though. That's because that's the other metric you want to look at. The ROCE FY23, look at the numbers, quite unimpressive in that sense. ROCE and ROE numbers, sub 4%. It's obviously jumped in FY24, would have likely again tapered down in FY25. Again, you want to see more stability on this number. It's likely a thumbs down, but we're giving this a neutral only because we see it on an improving trajectory, and therefore can this sustain and can the ROCE number or the IRRs within each project make good returns for investors on the invested capital that shareholders or the companies plowing back into itself is really the question that we'll try to answer again with management, but we'll give this a return, give this return ratio number a neutral for now. Let's look at shareholding pattern, Anushi.
Yeah, so in terms of where the shareholding pattern is concerned, there's nothing much to talk about here in terms of where the promoter holding is concerned. It's a flat number that we are looking at, no changes there. 61% is the shareholding that they had in March 25. Again, comparing this to the September picture also, there are not major changes that we are seeing. FII is also 7.74% is the ratio that we are looking at. So that has remained majorly in line. DI is again a similar kind of a ratio that we are seeing. Public holds about 23.4% of the stake in the company. So overall, this metric we have given a thumbs up, considering there are no major rejects or changes that we are seeing in terms of how the shareholding has panned out.
Yeah, just one quick point that I'd like to make here is that SBI Contra Fund holds around 7.5% stake in the company as at the end of FY25, 7.67%, and continues to buy. So they, at the start of the last financial year, they had around 6.7% stake, which they've hiked to 7.7% now. So something to be kept in mind. SBI Contra is one of the funds that looks at this particular company in positive light. Now let's look at street cred, because that's again the other metric that we try to track. And the last 1 month returns have been tough to come, negative 12%. The year-to-date period returns also are negative 25%. So we've seen a bit of a correction on the counter. The last 1 year, the stock is down 29%. And in the last 5 years odd, the stock has been a 6-bagger. So it's done clearly very well over the last 5 years odd. And you can see the kind of trajectory that even the numbers have taken, especially after the FY22 kind of period. It's really gone up substantially, but a lot of those returns have been front-ended. So in the first 3 to 4 years, we've seen very solid returns. Over the last 1 year, stock is actually down 30%. So a lot of the pain currently sits in the short to medium term with regard to this counter. So something to be kept in mind. We'll give this a neutral. Anushi, what's the outlook looking like? What is the guidance that the company is giving? And thereafter, we'll try and, on the basis of that guidance, try and extrapolate how do you derive a valuation with regard to this one.
Right. So let's talk about how the fourth quarter had panned out and subsequently the impact on the FY25 and the outlook forward that we are seeing. So in Q4, what we had seen is company had launched Ashiana Nitara. That's the phase 2 and 3 project that we are seeing, along with launched Ashiana Amara phase 5. That was conditional on the overall booking trends that we have seen for overall FY25. Now do note that the company had guided for around 2,000 crore of pre-sales by the end of this year. Company fell short of that target by around 63 crore mark. That is what we are looking at. Another concern has been some of the regulatory challenges affecting construction timelines of some of these projects that we are looking at. But on to the outlook forward, now company has given out a 5-year plan in which they have given higher weightage to the kind of return ratios they want to build in. They're expecting high teen margins over the next 5 years as well. So that would be in focus. This is in terms of PAT numbers that we are looking at. Along with that, they also plan to launch around 3 to 4 projects more. They plan to acquire land parcels, including a 20-acre site that we are seeing in Jaipur. So this is the overall picture that we are seeing for how the Q4 shaped up, leading to the kind of miss that we are seeing in terms of the FY25 number and how FY26 is expected to be going forward, right?
Absolutely. So therefore, given all of this, let's try and break down how the valuation looks like. And this is of course a very, very difficult job to do. But what we've tried to do is, and I'll explain this a little better, we've tried to pick companies within the 2,500 to 6,000 crore kind of market cap band. So you'll see the market cap here of each of those players: Ashiana, Arcade, Sunteck, Kolte Patil. And thereafter, what we've tried to do is basis whatever they have shared with us in terms of either their analyst investor presentations or in terms of the way we, in terms of the commentary that's coming through. This is the execution broadly. Broad number again, the approximate number in terms of execution over the next 5 years that's anticipated from each of these players, right? And thereafter, any guidance that they've given in terms of EBITDA or profit after tax. And I'll give you examples here. So for example, Sunteck has guided for an EBITDA of 21 to 23%. We've taken the profit after tax number at around 15% of the execution which Sunteck is expected to do on existing projects only and not on new projects. Again, a Kolte Patil, they've guided for around a 12 to 13% margin. We've deducted a decent amount in terms of interest cost, which is around 200 crore. On 25,000 crore, that's an EBITDA of around 3,250 crore. So we've deducted around 200 odd crore in terms of interest payouts, and thereafter, we factored in a tax of around 25% to arrive at this broad profit number on an execution size of 25,000 crore. So this may well change if any of these assumptions change, but broadly, as of today, as things stand, this is the broad profit after tax on this execution that the companies are going to do over the next 5 years. And thereafter, what we've done is we've just listed down the market cap. And when we're comparing the profitability with the market cap, what you're seeing is Ashiana trades at quite a large premium versus some of the other players. Some of the other players are just about a 10% premium at most. But Ashiana is at almost a 30 to 35% premium to the 5-year profit that we're extrapolating. Again, this may well change if there are projects which are added, and some of these numbers may well change if the companies go into new segments or new geographies. So some of these metrics might change, but as things stand, this is how we're looking at the valuation picture, and which is why we're giving Ashiana Housing a thumbs down. Also, mind you, and as Anushi has been arguing with me in the newsroom regarding this, Ashiana is in a very different segment compared to the others. But profits is really what we want to compare with the market cap, and this is 5-year profit, so it takes out any execution risk, at least from a near-term standpoint. So maybe for a year or two, there may be slower execution, delayed approvals, but despite that, you might still achieve that kind of profitability. So there are multiple things to be kept in mind, but this is broadly how we are looking at it. It's a tough one, but we've tried to piece this together, and we've given it a thumbs down, given the kind of delta that is there between this one and some of the others.
Right.
Yeah.
Well, yeah, that was quite a detailed piece. So this is what we are looking in terms of valuation picture. But, let's in fact speak to the management to understand how the picture forward is going for FY26 and beyond. That is what we are looking. We had the management with us, Varun Gupta, the director of Ashiana Housing. My first question is regarding real estate as a segment. As we are seeing, they have been marked by the regulatory challenges. This year, you clocked in FY25 pre-sales at a number of 1,937 crore. This was against the guidance of 2,000 crores. So talk to us about the year gone by in terms of how the booking challenges are and some of these regulatory concerns which were there.
This number is in the context of 2,000 crores, our targets. We actually had good sales across locations, except we missed our targets in Gurgaon. The launch of the last phase didn't go as we had targeted at the beginning of the year, though we still had a good launch. We had no regulatory issues. We were able to launch our projects that we had planned to this year. And overall things, regulatory challenges were not part of last year in terms of launches and pre-sales. We have had some regulatory challenges in getting OC, so our deliveries have gotten delayed. So Ashiana and Mall in Gurgaon, the OC came in now in April instead of March. So our delivery targets have been a little bit delayed because of regulatory issues.
Right. So considering that FY25 we saw about a 2,000 crore of a target, what's the outlook looking for FY26 in terms of where the pricing growth is concerned and also for the booking trends that we'll see? What's the booking value expected for FY26?
For FY26 also we are building a target of 2,000 crores itself, Anushi. We are looking at secular price increases across the board. Unfortunately, we have less stock to sell in one of our key markets in Jaipur, where we have to launch a couple of projects this year, and there are some regulatory challenges in getting those on board, and we have had limited stock because we found the land prices in Jaipur to be very expensive and we've been holding off. So with having little bit more limited inventory to sell, our annual targets are a little bit more constrained because of that, but we see secular price increases going forward.
Okay, so secular price increases in FY26 number remains at 2,000 crore. But out of the total area that you've booked so far, amount of around 2,100 crore is to be received in future. Can you break down the execution timeline for this number?
Most of this should get executed within the next 2 years. Some of it will go to 27, 28 as well. We actually give a delivery schedule in our investor updates. I'm guessing you're talking about this number from the December updates because the March updates have not gone in. The numbers of receivables will actually go up. And most of it should come within a 24-month time frame and some of it going to a 36-month time frame from.
And Mr. Gupta, also give us a number for the gross development value on all the current projects that you have currently, if you can talk to us about this number.
So, current gross development value of all our projects put together, including what's under construction, is about 11,000 crores. And we are targeting to realize the profits by FY30. Of these values, and I've as said, the expected after-tax profits from these projects is about 2,000 crores, and which we expect to realize over FY25 to FY30.
Just a follow-up on this, considering that current projects 11,000 crore is the number that we are looking at of the current land parcels that you're going to have, what is the kind of number that we look for that?
11,000 is inclusive of all the land parcels that we have, but excludes one parcel called Milakpur, which is stuck under litigation. So 11,000 is across the board put together.
Okay, and Mr. Gupta, how many new projects are being considered in terms of launches? If you can give us perspective, also the key regions where you're seeing most of these launches panning out. Give us a detail on that also.
So we have 4 launches planned for this fiscal year. Out of that, 1 is in Gurgaon, 2 is in Jaipur, and 1 is in Jamshedpur.
Okay, and of these new launches that are there, what's the gross development value for these projects?
So overall, the GDV of these projects combined put together is around 3,000 odd crores. Of that, we will not launch everything. So probably a quarter of it to a third of it will be launched. We like to phase our projects. So depending on the market conditions at that point in time, probably a quarter of it will be launched in this year.
Okay. And now one key risk that we are seeing for some of these real estate companies is the receipt of necessary approvals on some of these projects which are there. Any projects where you are seeing that approvals are pending?
So all the project launches that we're talking about have some approval risks attached to them. The comfort levels in Jamshedpur and Gurgaon are very high because we are at late stage of approvals. In Jaipur, one project has got even RERA approval, but which is a very, very small project. But the larger project that we want to launch, the risk on approvals there is higher and low.
Okay, so thank you, Anushi, as well as the management of Ashiana for giving us that perspective and that conversation with regard to Ashiana Housing. We of course also spoke with arcade developers earlier this month, or rather late last month, and therefore a couple of those real estate plays coming into focus and a lot of perspective that gives us. But that's how the KYC ratings stack up with regard to where Ashiana is concerned. And Ashiana, out of all the rating parameters, if you look at shareholding as well, street cred, the outlook as well as valuations, the KYC rating that Ashiana gets on the back of all of this is a 5 on 8. But it's been an interesting conversation. And Anushi, just with regard to perspective, they have around 11,000 crore of existing GDV, another 3,000 crore likely to be added over the next year or so, all of which will likely get executed by FY30.
Right.
That's the aspiration. And at roughly a mid-teens kind of PAT margin, that's broadly how one should look at a company like this. But thanks so much for breaking this down with us today, and thanks for staying with us. Completely out of time on this edition of KYC. From Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The second buyback is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Markets trade in a range as tech stocks fall, but banks hit fresh record highs as sentiment remains positive. Steel stocks are doing well in the markets. This is on the back of the announcement by the ministry about 12% safeguard duty being imposed on steel. Think again before you head to the jewelry store. Gold prices have crossed 1 lakh rupees per 10 grams. Textile exporters are likely to be beneficiaries of the US tariff regime. This is because of the differential in tariffs between Asian countries. IndusInd Bank appoints EY to carry out a second forensic audit, say reports. EY will probe the 600 crore rupee discrepancy related to the bank's Microfinance portfolio. And welcome. Good afternoon. This is Markets at 12 and I am your host Malika Mishra. Let's take a look at how the markets are doing at the moment. If you see the benchmark indices such as the Nifty 50 and the Sensex are both above 0.3% high, with the Nifty 50 standing strong about 24,000 levels, and the 30-pack Sensex is hovering around 79,600 levels at the moment. The broader markets are outperforming the benchmark, with the Nifty Mid Cap 150 and the Nifty Small Cap 250 both above 1% higher. The top contributors, if we pull up that chart, to the gains that we're currently seeing in the Nifty 50 basket are some of the top banking names like HDFC Bank, Kotak Mahindra Bank, State Bank of India, along with SBI and Mahindra & Mahindra as well. And HDFC Bank is actually leading the contributing pack with, on the back of strong Q4 earnings as well. While on the downside, you see Infosys, the IT lag, and Bharti Airtel, L&T, IndusInd, and also some other stocks that are sort of adding pressure to the Nifty 50 basket. Let's take a look at how the sectoral picture is at the moment looking as well, and you'll see that a lot of green, and in fact IT currently is the only laggard, which is down about 0.25%, and currently the sectoral heat map is being led by PSU Bank, Realty, FMCG Bank, Defense, Finance, amongst others. Let's take a look at the Nifty 50 heat map as well to check how some of the other stocks are doing in the basket. And you'd see, as I mentioned, a lot of IT names in the red, like you have IndusInd Bank, also Hero Moto, Power Grid, Infosys, Bajaj Auto, Wipro, Asian Paints, Bharti Airtel. So all of these stocks in the red. In fact, at the moment, as we speak, there are 31 stocks advancing and about 19 declining. So definitely a sadder picture than what was yesterday, how it was yesterday on the stock exchanges. Let's take a look at some of our market breadth as well, and you'd see that the advanced decline ratio looks healthy at the moment, with about 1,656 stocks gaining and just about 560 declining. So that is exactly how the markets are currently positioned. And moving on with the first story, we spoke to Vikas Parshad, portfolio manager and M&G Investments, about his market outlook, and he says that outlook on IT companies has gotten cloudier. Let's listen in.
What a difference a year makes when it comes to liquidity and the tightness around the financial system. What has not changed in the past year is our constructive view on India. When I was speaking with you last time, a few weeks ago, one thing I had mentioned is that we remain fully deployed in our India strategy, but as a firm, we were looking to increase our exposure to India and have that converge with the exposures that we've had in other parts of Asia, in North Asia in particular, and we have indeed done that. Late February was a great opportunity for us to increase our India allocations. We continued that in early March. We continue to do that even now, and it's across sectors. The financial sectors, especially the private banks and NBFCs, is one area where we've been very active this year in increasing our holdings. But there's a lot to like in India. That has not changed. If anything, I'm surprised by the pace of the rebound just over the last couple of weeks, given the uncertainties that we have. But you always have to ask yourself, what is in the price? And at the end of February, a lot of bad news was in the price after the 5-month-long sell-off that we had. Long term, nothing has changed for our view, whether it's small caps, large caps, financials. If there are certain areas where we are still cautious, even though they have underperformed, it's the IT services names. But again, we're reevaluating that call, given the underperformance that we've had, the earnings season that we've seen. And when you look at how IT services reacted post-earnings, and how the private banks reacted after very strong earnings, it gives you a signal of what is in the price, given how they've moved since then.
Vikas, hi, Gamanna here. The point you make about what is in the price, what do you think is in the price right now when we're seeing the rebound? And I'm asking this in the context of the concerns that we were talking about just a few weeks ago. One of them was the quality of corporate results. That's yet to play out, decent lot from a couple of banks, IT largely disappointing, and we have to see how that goes. What's in the price if we have an economic slowdown fears? I'm just wondering if anything has fundamentally changed from the concerns we were all talking about a few weeks ago as well.
Overall, in India, I don't think that's the case. If we look at our time horizon, which is 2, 3, 4 years out. Now, if you look at it sector by sector, yes, certain things have changed. There is more uncertainty in the automotive space and in auto parts, auto ancillaries, where we've been active. Last time I was on, Amin was on from JP Morgan as well. We had a good three-way conversation about that. And for IT services also, the outlook has gotten a little bit cloudier. But when you look at the performance, they have fallen quite a bit. So we have taken advantage of some of these falls to add back some exposure at the margin to both of these sectors. If you look at other sectors like consumer staples, the picture is more mixed, and I don't think that anything really has changed. The other difference between the end of 2024 and the beginning of this year is the increased exposure that we have had to healthcare services. We've switched some pharma exposure to healthcare services, diagnostics, hospitals, large cap, small cap as well. And then also we've been on the lookout for entirely domestic stories that are not contingent on the new policies coming out of Washington or Beijing or Tokyo. And there's plenty of choices in a market like India. Music streaming is one area that we're excited about, so we have exposure there. When I look at the market today and the opportunities we have on offer, the only thing that is scant, where the pipelines are thinner or less full than they were a few months ago, is in the ECM area, in the IPO arena. We think that will probably pick up as the markets have started to come back, but we continue to be very selective in what we spend our time on when it comes to new companies, especially in this environment where we're seeing disconnects and dislocations among names that we know.
So rightly, put, Vikas, the IPO streamline has dried up a fair bit. But did I hear you saying that you are adding on IT on the margins now?
Yes, we have, because of the magnitudes of the falls, and we remain underweight the sector, and the name count that we have in that sector is very low. It's the lowest it's been in years, actually, since just before COVID. But when we look prospectively and we look at the valuations and we look at the magnitudes of some of these falls, then yes, we've started to reduce that underweight, but not materially so. If IT had been the only sector that had been underperforming to this extent, then it would be different. We'd probably be adding more. But given the sell-offs that we've seen across a broad array of companies, small caps to large caps, we've added back a little bit less.
And you're favoring your smaller cap or mid cap IT players or the larger ones?
For now, the smaller companies, because we've seen even larger disconnects. We haven't seen all the earnings from all of them yet, but we have seen from the larger ones, and they've not been so exciting.
Now, viewers, IndusInd Bank is back in focus after the board appointed EY to carry out a second forensic audit to investigate for fraud. My colleague Harsh is joining us with the latest updates on this development.
Well, yes, as per news reports, EY has been appointed as to conduct a second forensic audit on IndusInd Bank. Well, EY is going to, as per reports again, EY is going to investigate a 600 crore discrepancy related to accrual of interest in the microfinance portfolio. This is purely relating to FY25 discrepancy and likely a Q2 or Q3 discrepancy in FY25, and therefore this doesn't relate to past periods. But the amount nonetheless is decently large. It's 1% roughly of IndusInd Bank's net worth. Mind you, they've already taken a hit of around 2.27% on the net worth, given the 1,580 crore post-tax hit that they have taken from their derivatives portfolio discrepancy. Now this is the other one. EY is also going to check for lapses and fix accountability as part of whatever reports are suggesting, and reports also suggest that it's not an issue which spans multiple years, and they're also going to investigate fraud if any. On the back of that, of course, stock reaction in front of you.
Thanks for that update, Harsh. And now let's take a stock of few counters buzzing in trade today. Rajratan Global is soaring in trade after posting their Q4 results. The numbers are in line with estimates, and my colleague Varsha is joining us to break these numbers down for us.
So they've come out with their Q4 FY25 numbers. So basically, company makes bead wire, which are used in your tires. So their Q4 FY25 numbers, if you see, inline set of numbers, I would say good numbers when it comes to quarter on quarter. But yes, still there's still margin pressure when it comes to year on year. There was a volume growth of 6%, which is a good thing. But this was offset by price decline of almost 1% year on year. For India business, they had a volume growth of 17%, but for Thailand business, they have a negative volume growth of 8%. Their EBITDA per ton for India, if you see, was up almost 37%, but overall on the consolidated operations, the EBITDA per ton was down 34% quarter on quarter. If you see, they have also approved conversion of existing black wire capacity of 12,000 tons per annum at Pithampur into wire rope capacity of 10,000 tons per annum. Now this move will actually improve their unit economics and aid overall profitability as per the management, and this capex that they are doing will be funded by a mix of internal accrual and debt. So overall, good set of numbers quarter on quarter, but yes, margin pressure when it comes to year on year.
Thanks for that, Varsha. And now 360 ONE WAM is in the news. The wealth management firm has approved an exclusive collaboration with UBS. And my colleague Harsh is joining us again. Harsh, we hear that this is an exclusive strategic collaboration between the two entities. Give us some more details about this.
Yeah, so I'll break this deal into three parts for ease. First is there's going to be a strategic collaboration between both entities where clients of UBS AG, which is the German which is the Swiss giant, will also enjoy the advisory which 360 ONE provides, and 360 ONE's clients will enjoy services which UBS AG provides. So that's the one big synergy which will play out. The second piece is with regard to how will UBS AG benefit from 360 ONE and its growth in India. And that is going to happen through a 2,100 crore infusion of convertible securities which UBS is going to purchase from 360 ONE. So 360 ONE is going to issue these securities to UBS at a deal value of roughly 40,000 crore post pre-money and around 42,000 crore post-money. So they will own around 4.95% at the end of this. They will own around 4.95%. UBS AG will own of 360 ONE WAM, which is a listed entity. That's the second piece. The third piece of it is the takeover of the India business of UBS AG, which includes also other businesses which UBS AG has been incubating in India, including stockbroking, distribution, discretionary and non-discretionary, portfolio management. All of that, including the Credit Suisse business of India, which UBS AG owns, will now be hived off to 360 ONE for a consideration of 307 crore. The AUM of this business is around 26,000 crore. So largely a decentish kind of valuation that they've got on this business as well. So it's a three-part consolidated arrangement of sorts which has happened.
Thank you for giving us that triangular perspective on this deal, Harsh. And viewers, Ashiana Housing was in focus on KYC, which is our show today. And our research team broke down the company's income statement and explained how investors must consider the company's low base when gauging its growth. Take a look.
It's not a very impressive looking income statement, also from a perspective that you will likely see that for real estate players, the execution is chunky. So something to keep in mind. FY25, when I'm looking at the numbers, not impressive at all. In fact, trailing 12 months, FY25 ended 9 months, which is not reflecting in the graphics in front of you, is just about 600 crore in terms of top line. But outside of that, it's grown at a fairly healthy clip of a low base. Mind you, for a 3,000 crore market cap company, it's doing about 1,000 crore in profit after tax. The EBITDA margins have gone up from 7 to 10 odd %, and the net profit also has gone up in similar kind of stead, as you can see. And for FY25, as I did mention, not a very impressive set overall, at least up to 9 months. So some bit to be done, some room to be left with regard to execution. And that's something, of course, we will ask management as well. So that's on the income statement. Let's look at the CAGR. And again, it's a 3-year sales CAGR of 57% off a very, very low base, and a 3-year profit CAGR of 147%, again off a very, very low base. And loss making as well, in fact, a couple of years back. So something to be kept in mind. When you're looking at the standalone numbers for 9-month FY25, you can see revenue is in fact down 52%. EBITDA is loss at around 50 lakhs odd, and you have a net loss which is at around 2.1 crore, which has been clocked by the company.
Right, and now two other stocks that are buzzing in trade today are Anand Raj and Pitti Engineering. And basically Anand Raj clocked a strong growth all round, while Pitti Engineering in its Q4 results posted a sales volume jump of around 50%. And to give us more details on their quarterly results, my colleague Anushi is joining me in the studio.
Well, first off, I'll start off with Pitti Engineering. Now, the highlight over here is the revenue growth that we've seen, about a 40% of a growth in terms of the revenue numbers that we are looking at, of course aided by sales volume, which increased 50% on a year-on-year basis. If you talk about the margins, they've also expanded to 17.7% as compared to 15.5% last year. However, net profit, we are looking at a downtick of around 21.5%, but do note that there is an impact led by a lower other income last year. So like interest cost also going up by 36%, another factor as to why we are looking at a downtick in terms of net profit, but margins and revenue growth numbers continue to remain pretty strong. Anand Raj, on the other hand, no complaints here. Revenue, if we are seeing a 22% of a growth number is what we are looking at. Margins were particularly impressive at 26% as compared to 23.6% last year, aided by about a revenue growth of 22%, and EBITDA also seeing about a 36% growth. Net profit saw 52% growth at 119 crore as compared to 78 crore. Of course, a lot of focus now remains on the data center business that the company has, or even the cloud servicing business that the company has, will aid the higher margin business that the company aims to maintain. So focus would remain on that front as well. So two results, overall strong set of numbers that we are looking at.
Thanks for that update, Anushi, on both those results. And now Morgan Stanley continues to keep India at its top pick among emerging markets, and my colleague Neeraj Shah has the details of their India strategy.
Since the Indian markets are doing so well, we thought it best to get in some macro note as well, and Morgan Stanley's Ridham Desai and team have put out that India strategy note, in which they speak about why India continues to be our top emerging market pick. Now, yeah, this question mark is not needed, but there are a clutch of factors. They haven't bifurcated into it, but I have bifurcated into 3 buckets. So first, cross-asset factors. They say India's low beta is helping it to significantly outperform markets, because the world markets or investors have realized that India is a low beta market per se. And weak global markets, the caution though, is that weak global markets can cap absolute returns, but relative returns, India will probably do well. The domestic factors which are at play for this, the strong macro stability with improving terms of trade. And this we can clearly see in a clutch of negotiations that are happening both from a G2G perspective as well as maybe G2B or B2G perspective. Then mid to high teens earnings growth annually over the next 3 to 5 years. We've seen that already. Hopefully we'll see that again, because that's a big shot in the arm. The reliable source of domestic risk capital. And viewers, as much as we scoff at it, or if we scoff at it, is nothing to scoff at. That's a sizable pool of money that is coming in. And remember the HDFC investor, AMC investor con call yesterday, they mentioned that flows are still at 98% of peak, which is substantial in volatile markets like this. And of course, they point out that the dovish RBI, sluggish oil prices, and likely Indo-US trade deal are some of the key domestic factors. And technical factors include persistent retail buying, underpinning India's structural nature of the market. Foreign portfolios positioning is the weakest since we've had data in 2000. And there are early signs, according to Morgan Stanley, that the FI view is shifting, and their proprietary sentiment indicator is in the buy zone. So multiple factors why Ridham Desai and team believe that India, as to justify how India is their top investment idea currently.
Thanks for that, Neeraj. And moving on, another day and yet another outperformance by Nifty Bank over Nifty. And Q4 earnings by major banks have only given a boost to this momentum. ICICI Bank is one such counter that posted a strong Q4. And analysts are crediting the CEO Sandeep Bakshi for it. My colleague Harsh has gathered some data to tell us how consistent Bakshi has been in harmonizing these numbers.
Well, it's been fantastic to try and understand this better. So let's quickly dive straight into it. In terms of just stock price performance, and this is where it really starts to stand out. One is quarter after quarter, ICICI Bank, at least over the last couple of years, has delivered a beat versus analyst consensus. And therefore, I've tried to do this exercise. In 9.5 years prior to Mr. Bakshi's appointment, the stock was up just about 260%. That's the kind of return it gave. So it gave a return of around 14.5% for those 9.5 odd years. Thereafter, just look at the contrast in terms of absolute returns. It's twice that of the 9.5 year period in a 6.5 year period. And therefore, the stock has compounded at nearly 25% from 2018, since the time Mr. Bakshi took over, till now. Now, what are the factors that have led to this consistent kind of performance? Look at the FY18 number in terms of loan growth. It was sub 11%. Thereafter, in not a single year has ICICI Bank not done a teens kind of growth, except in one, which is FY20. And no concern there, because it was it was just the start of COVID. So maybe some bit of tempering there, but outside of that, just look at the kind of growth that ICICI Bank has clocked. Just been a consistent compounder of sorts in terms of loan growth, steadily increasing their loan growth. Now, in terms of profitability as well, and you'll see the bar chart as it goes, and it's a beautiful one. So from 0.9 times in terms of ROA, ROA dipped and thereafter has picked up on a consistent trajectory. And even on a higher base, which is of 2.2% nearly in FY23, they've been able to expand ROA in FY24 as well as nearly expand it in FY25 as well. So the kind of ROA expansion even on a higher base is really the other piece that's standing out. So growth, better ROAs, and now we look at NPA ratios. Look at that NPA ratio in FY18. It was at 8.8%. Thereafter, Mr. Bakshi takes over, it falls to 6.7% immediately. And thereafter, look at the trajectory of the fall. There's been no steep variance in terms of GNPA. It's been consistently falling across each of those years and currently sits at 1.7% nearly. And the net NPA ratio is even more fascinating to see, because now it's gone from 4.77% to something that's best in class. Just look at the kind of NPA ratio at the end of FY25 that ICICI Bank has clocked. Just goes on to show the leadership within banks is so very, very important. He's showed up on all of that, and he's improved the metrics dramatically for ICICI Bank. And ICICI Bank is the best bank at this point in terms of its performance as well as in terms of the way it's operating. So a phenomenal franchise is how he's built this, at least over the last 6.5 years. Something to admire, at least for the banking industry.
Very well said, Harsh, and thank you so much for bringing us that unique analysis. Moving on, viewers, US Vice President J.D. Vance has embarked on a pivotal 4-day visit to India, aiming to strengthen bilateral ties by unlocking economic opportunities and negotiating a potential trade deal. Yesterday, he met Prime Minister Narendra Modi and spoke on critical themes such as economy, trade policies, and geopolitical alliances amidst the backdrop of an escalating trade war between Washington and Beijing, India's main rival in the region. According to a statement put forth by PIB, PM Modi and JD Vance have already made significant progress in bilateral trade negotiations. Their focus remains on enhancing cooperation in energy, defense, technologies, and various other fields, thereby setting the stage for Donald Trump's potential visit to India later this year. Also, as of this morning, JD Vance, along with Second Lady Usha Vance and their children, visited Jaipur's Amber Fort and is expected to address a gathering at the Rajasthan International Centre later in the day as well. Now, speaking of bilateral talks, our Prime Minister as well left for Saudi Arabia this morning on this two-day visit. India and Saudi Arabia are set to sign at least 6 memoranda of understanding. Let's speak to my colleague Mohammad Ghazali from NDTV to understand what else is on the Prime Minister's agenda.
Yeah, so the Prime Minister is going to visit in Jeddah today, and where he is expected to meet the Indian community members here in Hotel Carlton, where I'm reporting from in Jeddah. And this visit assumes a lot of significance. One, because the Prime Minister is visiting Saudi Arabia after 6 years. The last time he visited was in 2019, and before that, the first step was in 2016 as Prime Minister of India. But this visit is also will be very much different from the previous visits, because in the previous 2 visits, he had visited the capital city of Riyadh. Now, this is the first time he's visiting Jeddah. Jeddah is a port city, which also brings our attention or focus back to the issue of connectivity. IMEC corridor is one project or a vision which India had conceptualized when it was hosting G20. Saudi Arabia, UAE, and other European countries are signatories to that project. So when it comes to the progress of that project, in the first leg, India has to build on or progress on the connectivity between India and UAE and Saudi Arabia. So with UAE, the logistical issues are getting processed. Perhaps the Prime Minister will also talk about the IMEC corridor and its progress with Saudi Arabia in the bilateral talks which he will be holding with Mohammed bin Salman today evening. Besides that, there will be new areas or avenues where India and Saudi Arabia will explore for joint collaboration, be it area of defense, space technology, AI, hydrocarbon. So these are certain issues, or space technologies are certain domain where India and Saudi Arabia will look forward for deeper collaboration. We know that India is the second largest trade partner for Saudi Arabia. Saudi Arabia is our 5th largest trade partner. We also kind of import all the crude oil, petrochemicals, and other such items from Saudi Arabia, and fertilizers, DAP. Actually, Saudi Arabia is our 2nd largest supplier for DAP, which is used in agriculture. So in all, these are the bilateral issues which will be discussed. But besides that, this visit also assumes significance because Prime Minister is visiting Saudi Arabia at a time when 2 global issues or 2 global developments are very concerning. One, we have the Russia-Ukraine war, for which the mediation and talks were happening in Saudi Arabia in the past few weeks. Then the issue of West Asia between Israel and Palestine, that war has also has stretched for more than a year. And India's stand for in both the issues, in both the conflict, is as much as similar to what Saudi Arabia stands for. When it comes to Israel-Palestine conflict, as Saudi Arabia says, India also stands for 2-state solution. It stands for removing all the illegal annexation of Israel on the Palestinian land. And when it comes to Ukraine-Russia conflict, Prime Minister Modi has said it on multiple occasions on global forum that how dialogue and diplomacy is the only way forward, and solutions can't be found on the battlefield. So Prime Minister will not only focus on deepening collaboration between India and Saudi Arabia, but he will also be apprised about the global developments of significance.
Ghazali, thank you so much for that update. And well, viewers, that's all the time we have on the show. But do stay tuned to NDTV Profit, as there's a lot more lined up for you right on the other side.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The second buy pick is a Naukri Info Edge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. A very good afternoon to all the viewers. I'm Hiral Dadia and with me is Varsha. Varsha, good afternoon. Interesting day of trade in terms of today's session because if you see the markets, clearly a 50 to 60 point gain is what you're seeing on Nifty 50. Let's quickly pull up Nifty 50 on the screen and then we'll follow it with Bank Nifty as well as what the other sectors are doing in trade. If you see overall, 0.3% higher, though we've cooled off from the day's highest levels of 24,242. We've come down to 24,072 and again reclaimed some higher grounds. Let's pull up, even the other sectoral indices and see what's happening on that front because Bank Nifty is the one which has been garnering a lot of attention, a lot of buying that's happening as well from the FI perspective. But you have the PSU Bank Index, real estate, FMCG, as well as consumer durables. These are the top gaining sectors in today's session. What's lagging is the IT space now. Initially, the 2 to 3 days of euphoria that you saw in terms of the IT counters, the call on the street was that, yes, there was some bit of short covering that is happening. In terms of this week, you have the expiry on Thursday. So that is a factor we need to wait and watch and see as well. But apart from IT of infra, which has been losing its
Sheen Energy is also down to the tune of almost around 0.1%. Let's quickly pull up the Nifty 50 heat map, as well as after that we will look at the contributors in terms of today's session. In terms of the heat map, sectors and stocks which are losing out. So you have an IndusInd which is probably under pressure. Infosys trading under pressure as well. Wipro, Bharti, NTPC and L&T which are losing out in today's session. Tata Consumers, SBI, RIL are a few of the other gainers as we speak. Let's look at a few of the contributors as well in terms of today's session. What's actually providing that support? And I mean, there you go. HDFC, second or third consecutive session where it's providing support in terms of where Nifty 50 goes. SBI, Kotak Mahindra Bank. So all the three banking heavyweights are the ones, which are on the front foot. Infosys again seeing profit booking. Why Infosys is interesting as well, because yesterday post the earnings, you did see an up move. And the key question was, though NDTV Profit clearly categorically mentioned that the earnings are below what the street was estimating, brokerages have been negative. There was some verdict on the street as well that probably there are a few of the aspects which could be positive, but there you go. Now, after that rally yesterday, you are seeing profit booking that's coming in today's session as well. Bharti Airtel trading under pressure, and this is after the TRAI data yesterday. ICICI Bank also, after posting a strong set of numbers, is seeing some bit of profit booking in terms of today's session. So that's with regards to where the large cap space goes, Varsha. Interesting is going to be how the broader markets fare from here on.
Yes, absolutely, Hiral. And if I were to talk about Nifty Mid Cap 150, it's almost up 1%, 0.98%. But okay, but let's see who are the contributors when it comes to Mid Cap 150. On the gainers list, you have Dixon Tech, Nippon Life, SJVN, Colgate, and Max Health. Max Health has actually seen a good uptick. The interesting part when it comes to Max Healthcare is company moving towards brownfield capex versus greenfield capex. On the loser side, when it comes to mid-cap 150, you have Nykaa, KPR Mills, Tata Investment, and CG Power. But interestingly, if you see Nifty small cap 250, it's up almost 1%. And if I were to talk about gainers, you have Alok Industries. Let's see what that counter is doing. This is gaining on the back of Q4 numbers. There you go. The stock is up almost 17% in trade today. You have Asahi India, Apar Industries, and Trident as well when it comes to gainers list in small cap 250. On the losers side though, you have RK Forgings, Just Dial. Yesterday we saw Just Dial giving a fantastic set of numbers. Maybe profit booking over here. You have Signed, and you have RBL also when it comes to losers list, as there was a block deal when it comes to Hiral RBL Bank. So these are the stocks which are actually losing when it comes to small cap 250.
I mean, it's an interesting day of trade as well from here on. In fact, let's also welcome in our guest Raghvendra Kedia, founder at Prosperity Advisors. Raghvendra, good afternoon and welcome to the show. Your quick view in terms of what's happening in the markets and taking the way the last 2 to 3 trading sessions have been, do you think this is a market for the bears or the bulls?
Good afternoon, Hiral. Broadly, we continue to maintain our stand that it will be a seesaw market for the rest of the year, and we would actually see a range-bound play in the overall Nifty. So we had a great rally from 2014 till 2024, and we believe that 2025 and extended till 2026 may be a time correction in the market. So on the upper side, Nifty 50 could trade at a range of around 24,500, 24,300. So we are on the higher side of the range. So we expect some profit booking, some negative pressure to come in at current levels. And on the lower side, we believe that a broader range of 2,000 points, which could take Nifty down to levels of 22,500, 22,700. So broadly, a range-bound movement in market could continue. And considering we are on the higher side of the range, we believe some profit booking can happen at current levels.
So, I mean, a range-bound market is what is on the cards as per what Raghvendra is mentioning. In fact, Morgan Stanley continues to keep India as its top pick amongst emerging markets. Neeraj has the details of their India strategy report, which he's decoding for all our viewers. Neeraj, over to you.
Since the Indian markets are doing so well, we thought it best to get in some macro note as well. And Morgan Stanley's Ridham Desai and team have put out that India strategy note in which they speak about why India continues to be our top emerging market pick. Now, yeah, this question mark is not needed, but there are a clutch of factors. They haven't bifurcated into it, but I have bifurcated into 3 buckets. So first, cross-asset factors. They say India's low beta is helping it to significantly outperform markets because the world markets or investors have realized that India is a low beta market per se. And weak global markets, the caution though, is that weak global markets can cap absolute returns, but relative returns, India will probably do well. The domestic factors which are at play for this, the strong macro stability with improving terms of trade. And this we can clearly see in a clutch of negotiations that are happening both from a G2G perspective as well as maybe G2B or B2G perspective. Then mid to high teens earnings growth annually over the next 3 to 5 years. We've seen that already. Hopefully we'll see that again because that's a big shot in the arm. The reliable source of domestic risk capital. And viewers, as much as we scoff at it, or if we scoff at it, is nothing to scoff at. That's a sizable pool of money that is coming in. And remember the HDFC investor, AMC investor con call yesterday, they mentioned that flows are still at 98% of peak, which is substantial in volatile markets like this. And of course, they point out that the dovish RBI, sluggish oil prices, and likely Indo-US trade deal are some of the key domestic factors. And technical factors include persistent retail buying, underpinning India's structural nature of the market. Foreign portfolios positioning is the weakest since we've had data in 2000. And there are early signs, according to Morgan Stanley, that the FI view is shifting and their proprietary sentiment indicator is in the buy zone. So multiple factors why Ridham Desai and team believe that India, as to justify how India is their top investment idea currently.
But thank you, Neeraj, for all the details. Well, moving on, let's shift our focus to Himadri Specialty Chemical. Let's see what that counter is doing, because the stock was buzzing. There you go. It has slightly come off. The stock was buzzing in trade today on the back of Q4 numbers that the company has announced. Let's see what those numbers are. Revenue is down almost 3.6%, but EBITDA was up 30% and margins were at 20% versus 15% last year. Now, so the growth that you're seeing, except revenue growth in EBITDA and margin, it's all because the value-added products that they've been selling. So this is a growth which has been led by value-added products. Sales volumes though decreased almost 3% year on year, and the EBITDA margin increase that you're seeing is led by high value specialty products, and net profit growth was led by uptick in EBITDA. And a company is also focusing on capex, though this is not a new news. They are actually expanding when it comes to specialty carbon black expansion. So there's been brownfield expansion of new specialty carbon black line of 70,000 metric tons per annum, and with this they'll increase the total specialty carbon black to 130,000 metric ton per annum. That is doubling of capex that we are speaking about, and this capacity will be operational by Q3 FY26, and company will also set up a unit to extract high value added products. So overall, if you see, Himadri has given a good set of numbers, except the volume degrowth that you're seeing, but good uptick in EBITDA margin. But let me go to Raghavendra. Raghavendra, Himadri Specialty, do you track this? How are you seeing these numbers? Because good uptick when it comes to EBITDA margin, and everyone in chemical space want company to go into higher value added products.
Good afternoon, Varsha. Broadly, we do like the numbers overall in what Himadri Specialty Chemicals have posted. We would rather prefer to see the glass as half full, where even the revenue degrowth, that is very marginal of around 3.5% less revenues versus last quarter. But on the silver lining side, we do take what there has been a significant expansion in margins. There has been a significant improvement in EBITDA. And in the coming quarters, what if they continue to maintain margins of 20% with a higher revenue growth? So that will be icing on the cake. So we do believe that at levels of 480, 483, Himadri Specialty Chemical continues to look attractive. We believe a moderate upside of around 15% from current levels for a target of around 560, where how we have reached is again a very moderate earning per share of around 12.5 on a full year basis, giving a P multiple of 45, leads us to a target of 560. So that's a 15% upside in a 1 year investment horizon. So the numbers look attractive. We are happy to see the growth in EBITDA, the growth in margin, and we believe that the revenues, which have been slightly dented this quarter, would pick up significantly in the coming quarters for the stock to reach targets of 550, 560 in the quarters ahead.
So 550, 560 is what you should be watching out for as well with regards to where Himadri goes. But moving on, Mahindra Logistics, that's an interesting stock to watch out for because clearly if you see a 52-week high of 554.7 is what that stock has hit in the last 1 year. From there, it's gone down to around 238, so almost halved in terms of in the last 1 year. But now the journey seems to be on an upward trajectory, at least in the last 1 month, where the stock has seen gains of almost around 19 to 20% coming in there. Now, what's happened with the earnings? Because that's what is a trigger for the stock to see gains of 3.5%. If you see in terms of the consolidated numbers, around 8% is the kind of top line growth that we've seen. Margins have also seen an improvement and the losses have reduced. From a quality perspective, the express business is something which continues to be impacted. However, there are some green shoots that are visible in the express segment, and this is mainly on the volume front. The key is going to be sustainability of the express business from here on once the volumes start to improve. Apart from that, there has been a positive surprise in terms of the contracts logistics segment. If you talk about the operational performance, the losses have been there, but the management has said that they're expecting an operational turnaround to come in the second half of FY26. And the focus is going to be on growing the integrated logistics business, and their expansion plan is expected to continue from here on. Overall, if you talk about their expansion as well, in fact, they're developing almost a 1 million square feet across clusters of Kolkata, Pune and Agartala, and that is going to be operational from the first quarter of FY26. I think one of the brokerage firms, that's Nuvama, also has a hold rating on the counter, and if you see in terms of where their target price is concerned, that is at around 325, so pretty much at its target price so far. So that's with regards to where Mahindra Logistics go. Now, the logistics space is going to be interesting, taking into consideration the tariffs as well, because there was a rush in the last couple of weeks. Let me actually check with Raghvendra his view. Raghvendra, your view in terms of Mahindra Logistics and taking into consideration the tariff war, how are you seeing the sector being impacted?
Hiral, we actually studied the quarterly numbers, and we do believe that the stock at current levels of around 315, 320, Mahindra Logistics is fairly priced. The stock is seen to be slightly expensive if you look at the valuation matrix, where a full year EPS of around 8, earning per share of 8, and a P multiple of around 40. So that gives us a target of around 320, which is where the stock is currently trading at. There has been the sales growth of the company has been at around 12%, which is not impressive. And if you look at the peer group comparison, it is slightly expensive in terms of the other logistic companies which are available on the listed space. So the current price of 315 or 320 on Mahindra Logistics do not attract us as a buy candidate. We will continue to watch. There has been an appointment of a new managing director. So we will wait how the performance in terms of the massive capex they are doing in the next 2 quarters. But until then, it's an avoid or wait and watch on Mahindra Logistics at current levels of 318.
So wait and watch when it comes to Mahindra Logistics. Well, sticking to earnings impact, Anantraj and PT Engineering are in focus as well. The stocks are buzzing in trade after posting their Q4 results. Anushi joins us to help us break down the numbers.
Well, first off, I'll start off with PT Engineering. Now, the highlight over here is the revenue growth that we've seen, about 40% of a growth in terms of the revenue numbers that we are looking at, of course aided by sales volume, which increased 50% on a year-on-year basis. If you talk about the margins, they've also expanded to 17.7% as compared to 15.5% last year. However, net profit, we are looking at a downtick of around 21.5%, but do note that there is an impact led by a lower other income last year. So like interest cost also going up by 36%, another factor as to why we are looking at a downtick in terms of net profit, but margins and revenue growth numbers continue to remain pretty strong. Anantraj, on the other hand, no complaints here. Revenue, if we are seeing a 22% of a growth number is what we are looking at. Margins were particularly impressive at 26% as compared to 23.6% last year, aided by about a revenue growth of 22%, and EBITDA also seeing about a 36% growth. Net profit saw 52% growth at 119 crore as compared to 78 crore. Of course, a lot of focus now remains on the data center business that the company has, or even the cloud servicing business that the company has, will aid the higher margin business that the company aims to maintain. So focus would remain on that front as well. So two results, overall strong set of numbers that we are looking at.
Well, thank you, Anushi. Yes, absolutely good set of numbers by Anantraj and Pitti Engineering. Raghavendra, your view on both the stocks, but especially when it comes to Anantraj, because they are going into data centers and a lot of hype has been created, and that's the reason we have seen a uptick in the stock as well. So, are you tracking Anantraj?
So, Varsha, Anantraj, we have been tracking the space of data center, and it's very fancy, if you say. And we don't want to be on the have a FOMO feeling where we have missed out some great opportunities, where though the valuations are slightly discomforting or slightly expensive. But if you see Anantraj on a standalone basis, the company has a revenue or an earning rate of around 8 rupees on a full year EPS basis. So that still makes it very expensive at P multiples of 60. So if the stock corrects to levels of 430, 440, then it might look attractive. But on the valuation metrics, though the company has come out with very fantastic, impressive earnings, we do believe that there is some kind of froth in valuation, and a slight price correction of 8 to 10% would make it more attractive. Moving to Pitti Engineering, the stock currently trades at around 1,000. We do believe that the company has come out with very impressive numbers in terms of revenue, EBITDA, margin expansion. The commentary also is encouraging. So a 20% upside at current levels for a price target of around 1240, 1250 for a 12-month investment horizon is possible in Pitti Engineering. The stock has corrected in the last 1 year, and this dip plus this fantastic numbers could be taken as an entry level buying opportunity at current levels for Pitti Engineering at levels of 1020.
Right, so that's with regards to a few of the stocks which have come up with their earnings. But one sector that has been seeing some bit of profit booking in today's session is IT. Now, Macquarie Capital's Ravi Menon spoke to NDTV Profit about the fourth quarter earnings of large cap IT companies, and he told us his stock pick was TCS and explained why. Let's first listen in to a chunk of his conversation.
I think that this has not been, I'd say, as gloomy as people have made it out to be. I think it's been moderately encouraging with North America for TCS actually, fairly flat. For Wipro, that's actually grown. So it's slight decline, but it's been in-fees results, I think, that have been very disappointing with North America down about 6%. And very broad-based decline across industries. But I think that's more probably company-specific and their portfolio-specific issues. It's not something that I would say applies to the whole industry. We expect that clients in the US would have deferred some spending, but we are not looking at sharp cuts like we saw early on in the onset of COVID-19. People just want, I think, some certainty, and once they have that, they will start making decisions on spending. And I don't think that we will have a sharp quarter-on-quarter decline. Maybe revenue might be flat, marginally down in Q1, not a sharp decline. That's how I expect Q1 to be.
That's how you expect Q1 to be, but in terms of the guidance that has come from Infosys and from Wipro as well, do you think that IT companies are erring on the side of caution here, Ravi?
To some extent, I think, for Wipro, definitely that's the case. For Infosys, I think where the bookings are, it's actually very similar to what they've done in FY23. And, that year, in FY24, they reported 1.4% CC growth for the full year. And they actually had pass-through revenue as a tailwind that year. This year, as pass-through, they have suggested will be a headwind because they are expecting lower pass-through in FY26. So with that, I think, their guidance may actually, I would say, be realistic. But I think the others might err on the side of caution. And it really is a difficult environment. I would have actually said that, think we could have expected a tougher situation if it hadn't been already for 2 years of, steadily trimming what they could cut. So we are in a situation where I think some of what could be thought of as discretionary 2 years back is now become, an imperative. You really have to spend this year on some of these projects that have been deferred too long. So I would expect cost takeout projects to bundle with transformation. So larger deals, and I think that doesn't really rule out even some of the mid-cap companies, right? Because even they are now, many of them are over $1 billion in revenue. Someone like an LTM Mindtree, I think, would be a promising challenger. Many of those Persistent, Coforge, or other firms that I think can also play good roles as challenger firms in this.
So that's the view coming in from Ravi Menon of Macquarie on IT as a sector. But one company that will be reporting earnings today is the HCL Tech post-market. As my colleague Puneet is standing by to tell us more. Puneet, what's your expectation from an HCL Tech taking into consideration how TCS, Infosys and Wipro have fared so far?
Well, thanks for that. It's expected to be a somber quarter again for HCL Tech, similar to the other large cap IT players as well. We're expecting just about a percentage growth in terms of revenue to come in at 30,261 crores, while EBIT margins are expected to fall by roughly 116 basis points to come in at 18.63%. Now, this will be the EBIT margins will be impacted because of a wage hike in this particular quarter, and the profits will subsequently fall by 4% to come in roughly at 4,376 crores. Now, apart from the wage hike in this particular quarter, the product business is also expected to have a very weak quarter and a seasonal weak quarter essentially. Nomura is also expecting in terms of deal wins of about $2 to $2.5 billion in terms of deal wins for HCL Tech in this quarter. When you look at the constant currency growth over the last few quarters, actually Q3 is generally the strongest for the company in the financial year, and that was in the last quarter at 3.8% in terms of constant currency revenue growth on a quarter-on-quarter basis. So we are expecting a quarter-on-quarter fall in terms of revenue, at least on this metric for HCL Tech. Well, on the other hand, in the same time last year for Q4, it was at 0.3%. So we might see some growth there, but the number generally in Q4 for constant currency revenue growth is generally weaker. And finally, in terms of headcount addition as well, and here's the interesting trend. Over the last 8 quarters, the company has actually had negligible to actually negative headcount addition cumulatively over the last 8 quarters. And while the attrition has gotten better from roughly about 19.5% roughly 2 years ago to 16.3% now, essentially there's been no headcount addition because of slower revenue growth. And in terms of guidance, the company does report full year guidance expectations. Now brokerages are penciling in 2 to 5% growth in terms of constant currency for HCL Tech for FY26 specifically. It's similar to what was expected out of Infosys as well, but Infosys did report just 0 to 3% growth. So I think guidance, commentary as well as the deal wins, these will be the key things that I'll be watching out for in this particular quarter.
Right. Thank you, Puneet, for getting us the details. Raghvendra, your expectation, number one, from HCL Tech that will be reporting numbers today, and from the 3 IT majors which have reported their quarterly results, which have been slightly on the weaker side in terms of expectations, and the outlook is remaining absolutely weak. How would you look at the space? Do you think you see an opportunity to buy from a long-term perspective?
Hiral, I think you read my mind where I would actually see this as an opportunity to buy for a long-term perspective. Broadly, what has happened to the overall IT space after the reportings of large cap stocks in terms of their earnings for Q4, we can actually say, greater expectations, greater disappointments. So the street was expecting in terms of order wins, in terms of revenue, some great numbers where the companies have posted good numbers, but they might have fallen short of the very high expectations the street was expecting them to deliver. So still what we would take away is the earnings have been good, the order wins have been moderately fine, and the attrition rate has nothing been on a yellow flag side. So any opportunity on the price correction side could be taken as buying IT space. And we have a preference in terms of large cap IT names in the likes of Infosys, HCL Tech, TCS, and Wipro. And we believe that the global macro where a US corporate tax reduction would actually make huge orders coming from US corporates to the Indian IT. The strength of US dollar versus the Indian rupee would also augur well for the margins of the IT companies. So it's a buy at current levels for large cap IT names.
Right. With that, viewers, it's time for a break. Don't go anywhere. Stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Markets get momentum. Nifty hovers around the 24,200 mark. HDFC Bank ITC contributes the most. Sensex nears the 79,600 mark, up 200 points.
All sectors barring Nifty IT and energy trading green. Nifty Metal rises to highest level since April 4. Nifty Realty continues to build gains, top sectorial gainer.
And think again before you head to the jewelry store. Gold prices have crossed 1 lakh rupees per 10 grams.
RBI releases final guidelines on liquidity coverage ratio. Banks are now required to set aside less funds against retail deposits than anticipated.
Also on the show, the biggest banking turnaround story in India. How ICICI Bank's Sandeep Bakshi steered the ship to growth. Welcome back. You're watching Profit Buzzers. Let's quickly take a look at what markets are doing at 1 p.m. as we speak. Right now, the uptrend does continue. Let's pull up Nifty 50 as well as Bank Nifty, post that on the screens. I mean, you did see a strong move on that front. There you go, 0.2%, but some cooling off has continued as we were talking at 12:30 as well. 24,179 is what you're tracking. Let's pull up Bank Nifty. That's the Bank Nifty. It's private banking space as well as the PSU Bank Index. There you go. Again, that index is cooling off, but you're seeing gains of around 0.8% coming in there. So clear outperformance coming in from the BFSI space as compared to what Nifty 50 is doing. Broader markets, if we can have the mid cap and the small cap index on the screens as well to understand the kind of performance, that outperformance has continued. It has remained absolutely stable in terms of today's session. If you talk about the mid cap index, as well as let's look at the small cap 250 as well. There you go. 1%, a marginal dip, but absolute steady moves on that front. Overall, in terms of stock specific action as well, let's just pull up the top gainers on Nifty 50 as well as what's losing at this hour, because interesting names, if we can get that heat map. There you go, HDFC, ITC, SBI, Kotak. So ITC is again trying to climb the ladder. And on the downtake, if you talk about stocks like Infosys, Bharti Airtel, ICICI Bank and Power Grid. So these are the names that we have been watching out for in terms of today's session. We have Raghvendra, who is with us on the show, who continues. And you have Vinay Rajani from HDFC Securities who joins in. Vinay, very quickly in terms of few of the names that are making headlines today. I mean, it's the HDFCs of the world which are supporting the markets. And Infosys is the one which is actually pulling us lower. What are charts indicating for both of these names, and what would your call be?
Yeah, so both are in a different territory. IT sector is actually trying to form a bottom and has been struggling a lot, and Bank Nifty is at all-time high. So from the recent low of whatever low which we saw in the Bank Nifty in the month of March, from that level, Bank Nifty has risen by more than 17% and have taken a lead in this market, and financials entirely looking very strong now. The positive news are also coming. So most of the positives are already discounted. The sectors and stocks have already given a very good return. It might happen that for the time being it may go into the consolidation, but yes, the opportunity can emerge in the sector like IT, which has been struggling. IT index is down by more than 33% from its 52-week and all-time high. So once we see results coming out from most of the large cap segment in the IT space, there could be a bounce back in that particular sector also, because the way market is going, sector rotation could happen, and the stocks and sectors which have seen a healthy correction can see a strong bounce back. So yes, IT can reverse the trend in results season. We saw in the history that the trend changes due to the results, and already negatives have been discounted. So it might happen that for the time being, IT takes a lead from here. So pullback is expected in the IT sector, while small profit booking we can expect in the banking and finance sector.
Right. But moving on, 361 is now in the news. The wealth management firm has approved an exclusive collaboration with UBS. Harsh joins us with more on that.
Yeah, so I'll break this deal into three parts for ease. First is there's going to be a strategic collaboration between both entities where clients of UBS AG, which is the German, which is the Swiss giant, will also enjoy the advisory which 361 provides, and 361's clients will enjoy services which UBS AG provides. So that's the one big synergy which will play out. The second piece is with regard to how will UBS AG benefit from 361 and its growth in India. And that is going to happen through a 2,100 crore infusion of convertible securities which UBS is going to purchase from 361. So 361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore post pre-money and around 42,000 crore post-money. So they will own around 4.95% at the end of this. They will own around 4.95%. UBS AG will own of 361 WAM, which is a listed entity. That's the second piece. The third piece of it is the takeover of the India business of UBS AG, which includes also other businesses which UBS AG has been incubating in India, including stockbroking, distribution, discretionary and non-discretionary, portfolio management. All of that, including the Credit Suisse business of India, which UBS AG owns, will now be hived off to 361 for a consideration of 307 crore. The AUM of this business is around 26,000 crore. So largely a decentish kind of valuation that they've got on this business as well. So it's a three-part consolidated arrangement of sorts which has happened.
Well, thank you, Harsh, for all the details. Raghavendra, let me come to you first. How are you looking this collaboration and considering the valuation into picture?
We believe that as the overall penetration of stock market across the rural India happens, more and more money flows into it. So the overall space of the financial inclusion and the wealth management sector actually could have great quarters and great years ahead for the next 3 to 5 year horizon at least. So 361 WAM is a great play to bet on from in terms of the wealth management sector. Specific to this collaboration, we believe that this could actually augur very well for 361 WAM in the quarters ahead, where the global clientele and the global reach of UBS, and which also has Credit Suisse in its offering in terms of the India business is concerned. So 361 can look at it from a collaboration of with UBS and as well as Credit Suisse as far as the business is concerned. So we believe that in the next 1 to 2 years, when these collaboration synergies will out fructify, this could be a great stock to own, and it could be the best play in the wealth management space to bet on India's growing financial inclusion, wealth management, and rising income levels. So 361 at price levels of 960, 970 is a great stock to own in your core portfolio. And this collaboration just adds to our confidence for a longer term investment horizon.
Well, Vinay, how are the charts looking when it comes to this counter?
So the stock has been trading around its 50 and 200 days moving average. So I'm talking about exponential moving averages. So that level is around 1000. So for last 6 weeks, we can observe that this stock is not able to cross the 1000 mark. So once that is taken out, then we can expect momentum coming back to the counter. The good thing is that the entire sector has been performing very well in recently. In last 3 days, we have seen the capital market theme did very well. So 361 is also has risen from the lower level, but somehow it is facing resistance around 1000 odd level. Once that is taken out, then we can expect it to come back into the momentum zone, bullish momentum zone. So that is a strong resistance. As far as existing positions are concerned, that can be held with a stop loss of 900. So overall, there is an opportunity, but I think if you are a trader, then you should wait for this resistance of 1000 to be taken out, and then you can take a trade on it.
Right, so that's with regards to where 361 goes. So that's going to be an interesting stock to watch out for as well from the acquisition perspective. But moving on, everything that glitters is not gold. It's only gold that is glittering right now, because you've hit the 1 lakh per 10 gram mark. What's interesting from here on is whether this is a time to still buy. Are you going to see further upside, or is this the time to stay put? Is the question. Joining us on the show is Kishore Narne, Director, Head Commodity and Currency at Motilal Oswal Financial Services. Kishore, good afternoon and welcome to the show. My first question coming to you is 1 lakh per 10 grams. What is this telling you with regards to the story with gold? Because, you know, the average anticipation is that gold and markets always have an inverse relationship. Multiple times where this has gone wrong.
Yeah, good morning. I think this relationship between markets and gold has disconnected almost a decade ago, actually. Post Lehman crisis and post European crisis, I think when liquidity was the primary driver for most of the asset classes, so all the asset classes tend to lose these correlations between each other, and the historical correlations are no more applicable. So coming to the current situation, I think the world is looking for safety across the board, and the primary safe haven for the world at any crisis has been the dollar for quite some time. And when the confidence in dollar itself is shaken, the only alternative at this point of time available as a safe haven asset is gold. So there is no other safe haven at this point of time. Probably some of the Asian countries have Japanese yen still commanding that position, but as investors and funds stumble for safe havens, the only available instrument today is gold. So that's what is getting reflected in prices. Uh, the surprising factor is the speed, but not the direction. Direction has been predicted for quite some time. We've been bullish on gold for quite some time. We still remain bullish even at these levels, not ruling out any corrections, but at the same time, the direction towards 4,000 is on in dollar terms, which will take Indian prices close to around 1 lakh 20, 1 lakh 25,000, depending on where the rupee stands. So the direction remains the same. The surprising factor is the speed at which the gold is moving right now, which is showing the panic in the global market. Panic if the global leader in the asset classes, which is the dollar, has been questioned. So that's what is getting reflected in the price.
Right. Kishore, hi, welcome to the show. Varsha this side. So now you said that you being bullish on gold. Now, can new money be invested? Because every time we hear that, buy gold on dips, but that dip never comes.
Varsha, I think dips keep coming, so people miss the dips quite a bit, because when the dip comes, people actually turn bearish. That's applicable for most of the asset classes, including equities. Also, when actual dips comes, people run away from those dips. The problem is always at an all-time high. People tend to see that should I be investing my new money into this? Of course, it has to be done with a word of caution. There is absolutely a high possibility that you can see corrections ranging from 5 to 10% at any point of time. The kind of volatility we are seeing in the markets, across the markets, not only gold, but across the markets, the volatility is significantly higher. So 5-10% move here and there should not shake you up. So if you are that kind of an investor who are looking for 18 to 24 months in time frame, I don't think it is too risky. But of course, you should be putting a part of your new money and waiting for a dip. Probably tactically it should come at some point of time. So that's where you should grab more. But if you have, but gold is not a new investment. Every time all the asset managers, all the wealth managers suggest you should have gold in your portfolio. The range of that allocation can range from 15 to 15%, so 5 to 15%, 20%, depending on your age and risk profile, etc., etc. So the money which already you have in gold, just sit tight on that. That's what we are saying. Hold on to your investments, hold on to gold. New money, absolutely you have to start with caution.
Interesting point. Hold on, everyone understands. New money is what is actually wanting to find its way in terms of investments. So if you say that there is a possibility of a near-term dip that could be coming in, and if you're saying tread with caution, what are those levels one should be watching out for in terms of making their investments?
Rather than levels, I will be seeing that what triggers which should trigger this correction. So if there is any turnaround in Trump's policy, either even in the softness of the policy, or if there are negotiations with China, so if China and US comes on the table and start talking, I think that will trigger this correction. So the corrections could range from 5 to 7%, 8%. So 5% is something around 4,000, 5,000 rupees at current levels. So the worst come possibility is around 80 to 83,000 levels, which is right around 10, 15,000, which is 10% from here. 10% will bring you to 82,000. But anticipation of this dip, before that, if it goes to 110,000, and then from there it falls by 10,000, you'll be at the same levels. So I don't really have any clue whether Trump will call for trade talks, or what kind of this news flow happens tomorrow or day after, or maybe in the short term. So that's what the ambiguity of this market is today. But the direction remains bullish. So you may get or you may not get the corrections. But the trigger for the correction is any softness or turnaround in the policy, which I am not predicting at this point of time. I'm not anticipating any softness in the policy. Whatever happened between Powell and Trump is also triggering more and more agitated markets. So I think the turnaround is not visible. If it happens, there will be a correction.
Got it. Well, Kishore, so one more question on when it comes to gold ETFs. What's your view on that?
It's absolutely same. It's just an instrument. So view on gold is and ETF is absolutely same.
And also, silver is also at, near 12-year high. So now gold versus silver, where the opportunity lies?
See, for the last couple of years, most of the analysts have been predicting silver has been underperforming. It has to do a catch up. Silver is more bullish than gold. But unfortunately, these two are paired together. Traditionally, they are two precious metals. But of late, especially last decade or so, silver has leaned slightly more towards an industrial metal than a precious metal. And the concentration of value in gold, as the gold increases its value more and more, the ability and ease of holding large amount of wealth in the form of gold and the protection it offers to your purchasing power cannot be done by silver at the same time. And silver's lineage into the non-ferrous and industrial metal side actually also triggers some kind of weakness, because as we anticipate, there could be US triggered recession, slowdown. China also could suffer from that. And so global growth is going to slow down. In that case, if the industrial growth is going to slow down, the industrial metals will be suffering from that. And silver can actually take a hit from that. So that's why silver continue to be an underperformer at this point of time. I don't see a big turnaround at this point of time in that equation. So gold will be a front runner in both of these metals, but silver is not far behind, but will be an underperformer. If the economy turns around, silver will outperform gold. So the thing is, if the industrial growth and global economy does well, silver will beat gold. But if the global economy growth is at the question, so then the gold will be a preferred metal.
Right, so gold could be a preferred metal as well from here on. So that's an interesting take with regards to what could be in store for gold and silver. Thank you, Kishore, so much for joining us on the show and sharing your views. So that's a quick conversation that we've had on gold. Vinay, just a quick question. If you're tracking the charts in terms of gold and silver, what are your levels indicating?
So basically, going by the international US gold in 2022, international gold, US gold was placed at 1600. Now it is around 3500. So gone double in 2.5 years. So significant returns have been generated by this asset class. And I think this is into the breakout was there when it crossed the 2050 odd level. $2050. So that was a breakout level, multi-month high, multi-top breakout was there in the gold when it crossed $2050 in the year 2023. And after that, we have seen that it has reached to $3,500. So after breakout, it has gone up like anything. And now it is into an overbought scenario. I don't think this is the right time to invest into gold. Whatever negatives were to come, it has already come out. The tariff wars, which was announced on in the beginning of the April, it has already been discounted. So in the smart investors has been actually accumulating gold since mid 2022 in anticipation that this can happen. This uncertainty in the economy may emerge in the future time, and that has already been it has already been discounted now. So I don't think this is right time to invest in gold. One should wait for the major corrections, then only one should look into it. And as far as silver is concerned, yes, silver as an industrial metal, I see some opportunity. The ratio charts are suggesting that the silver should outperform the gold from here, being a part of industrial metal also. So I am of the opinion that silver ETFs and silver as a asset class can be a right place to start investing, and accumulating ETFs is the right strategy for the investment in the commodities.
Right, so that's with regards to where a technical view coming in on silver as well as gold. But moving on, we did have a conversation with regards to how the global tariff tussle could impact the textile sector. We spoke to Pearl Global. Now, Mika is standing by to give us the key takeaways from this conversation. Mika, over to you.
We spoke to Pearl Global Industries on mainly two things. The first one was whether the Indian textile industry sets to gain from the US-China trade war. The management did say that the US is looking at other sources after extra tariffs on China, and India is seeing inquiries from US importers for textiles. However, Indian industry may not gain a lot from the US-China tariff war because China's better alternatives are Indonesia, Cambodia and Vietnam versus India for something like a US. And India will face problems in matching the costs with China. The shortcomings are mainly because we as a country do not manufacture all kinds of textile because we do not have sufficient raw material flow for all the textiles. However, he didn't wash away any kind of hope. Cotton garments is a space that we could see a leg up in amid this China-US tariff war. And lastly, we also spoke about the India-UK proposed free trade agreement and how it could benefit India. Pearl Global Industries management said that it would help make India competitive with the other countries. It would lead to us gaining more business. The FTA would do away with the 9.6% tariffs that UK currently charges on Indian cotton, making us more competitive, and it could also bring an immediate 10% EBITDA bump for companies exporting in the UK.
Right. Thank you, Mihika, for all the details. I would like to thank Raghavendra and Vinay for joining us on this show. Thank you. And viewers, it's time to wrap this show. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The second buy pick is a Naukri Info Edge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture?
Hello and welcome. You're watching Top Page on NDTV Profit with me, Somit Sarkar. Well, sixth consecutive day of gains on Nifty we are seeing. Today we are up just 66 points, but it has been the sixth consecutive session. And the FNO stocks is Dixon Tech, which has been gaining the most. It's up 6%, followed by Finance, Max Healthcare, both up more than 5% in trade. Phoenix Mill, Colgate on the back of the UBS upgrade. The stock is also up 4% in trade. Mahanagar Gas is perking up in trade. It's up around 4%, trading around the 1,350 level. On the cash side, if you look at it, it's Rajratan Global Wire, which has hit an upper circuit of 20% on the back of strong set of numbers. Electronic Marts India is also buzzing in trade. It's up around 12%. On the losing side in FNO stocks, it's Cholamandalam Investment, which is down around 4% after the CLA said downgrade to hold rating from outperform, but they have hiked the target price to around 1,600 rupees or 1,700 rupees from 1,600. IndusInd Bank is down 4%, Nykaa down 2%, Cyient, Infosys, Power Grid down anywhere between 2 to 2.5% in trade that we are looking at currently. When you look at the sectoral indices that have been buzzing, in fact, it's the Nifty IT index, the only sectoral index which is in red, down around 0.4%. Apart from that, all other sectoral indices are trading in green. The highest gains is something that we are seeing on the Nifty Realty Index, that is up around 2.5%, followed by the Nifty PSU Bank Index, which is up around 1.7% in trade. Nifty FMCG again up around 1.5% on the back of the UBS note, which has come in. Let's also welcome in Mahesh Ojha, AVP Research and Business Development, Hensec Securities. So firstly, coming to you, the Nifty IT Index, after 4 straight days of gain, we are seeing some kind of breather when it comes to the IT Index. How are you looking at the overall IT sector currently?
I think the IT sector is currently fundamentally valuation is good, but some upside potential is kept. So we will see some moderate profit booking on a higher level. So I think it's a good buy, but the IT sector needs some positive trigger for upward side momentum. But still, it's a lower consolidation type. So on higher level, we will see some profit booking also. After some in lower level, we can see some buying opportunity, but on 5 to 7% or for 5 to 8%, if any high, then we will see some profit booking. So that kind of scenario in IT sector. So I think that's a part. Currently, we will see some more consolidation in IT sector as well.
Right, and when it comes to the FMCG space, we are seeing a lot of big moves. In fact, Colgate is up around 4.5%. At one point, it was up around 5% in trade. Anything that looks interesting when it comes to the FMCG sector?
Particularly Colgate, we have earlier suggested our client for 2-3 days back that buying opportunity in Colgate. We are seeing some more upside up to 2,800 level in Colgate. So Colgate was preferred in our peak also. So Colgate is still we are bullish on Colgate. We can see some more upside 2,700 to 2,800 level in Colgate. So Colgate is preferred.
Right. The Reserve Bank of India unveils its eased liquidity framework. Let's get in. Shubhana with more details on the same.
So banks are actually required to set aside less funds as against their retail deposits, what they had anticipated earlier in the draft guidelines by the Reserve Bank of India. So in the final guidelines, what RBI is saying is that banks must set aside additional runoff factor of 2.5% of for their internet and mobile banking enabled retail deposits. In the previous guidelines, what the RBI has said that the runoff factor would be 5%. 5%. So back then, a lot of banks had come out and said that this would impact their NIMs. So this would be a breather for banks now. And the draft guidelines had also proposed differentiating between stable and less stable deposits, but the newer, the final guidelines propose a more flat structure. And what we're also expecting from the new guidelines is that it will improve banks' resilience. And what RBI is saying that they have come out with these guidelines based on the data what banks have submitted to the RBI as on December end 2024. And based on that, the RBI is saying that the LCR, which is the liquidity coverage ratio of banks, could improve by 6 percentage points. And what the RBI is also saying that the new LCR norms will align with global standards, and it will be in a non-disruptive manner, given that they have given the banks enough time to comply with these norms. Additionally, what the RBI is also saying that funding from non-financial institutions like trusts and other partnerships, that runoff factor would come down to 40% as compared to 100%.
Mahesh, on this easing of LCR that we are seeing, which bank as per you stands to benefit the most?
Definitely, if these guidelines come from the RBI in line with their earlier steps, so I think it's a good step. And from this step, we can see some more liquidity improvement in the sector. From our specific larger bank like HDFC, SBI will get much more benefit. And if you see which bank have a more trust deposit, they will get more benefit. So from my perspective, SBI and HDFC, ICICI will get more benefit from these steps. And if you see some more other banks, that can be more benefit from their perspective, like RBL and also.
Right, now we are now joined by Nitin Agarwal, the Senior Group VP and Head of BFSI, to talk more about this LCR issue. Apart from that, we'll also discuss more about his report, the recent report that he has come in with. The recent, so firstly, to start off with the recent LCR guidelines that have come in, how do you see that benefiting the banks? The RBI and government are already addressing the liquidity issues in the market, plus this ensures liquidity beyond FY26 as well, right?
For the new guidelines that will be effective from 1st April 26, RBI has announced a runoff factor which is lower than what was there in the proposed draft guidelines. And to that extent, alongside RBI has also reduced the runoff factor on certain wholesale deposits. So the RBI has indicated that it will result in a 6% increase in LCR for the system. And many banks, especially the ones who are having a relatively lower share of retail deposits and a higher reliance on wholesale, will go on to benefit actually from this. So the liquidity situation, which is nevertheless already improved, supported by the multiple regulatory actions, I think as now the system transitions to the revised LCR framework, it will improve further, and that will ease out the funding pressures and the liquidity pressures that the banking system has faced, and will eventually reflect in a better growth and in the margin environment for the banks as such. So it's another measure as such, I will say. And over the last few quarters, we have seen multiple relaxing measures being announced. So it's just a continuation of that.
And so, which banks are best placed here? Any estimates on that front?
I think the banks with a relatively higher share of wholesale deposits, wherein the runoff factor has been reduced to 40%, will go on to benefit more. And so to that extent, I think banks like RBL, AU, IndusInd, IDFC First should see an increase in LCR as the new framework comes into effect from next fiscal.
Right. So now if you look at the BFSI sector, overall we have seen a paradigm transformation. Now going forward, you believe that the next phase will witness a hyper-personalized banking experience driven by AI and decentralized finances. Which BFSI sector company, as per you, is best placed to lead this next phase of transformation?
See, we have already seen a lot of changes happening in the BFSI, and last 5 years in particular, the sector has undergone a complete transformation. And given how the technology is now becoming a key driver of how the sector and the underlying companies are growing their businesses, I think this change is only going to accelerate. Already we have seen so many fintechs which are touching upon across different reams of BFSI and going on to acquire a sizable customer base. They will be able to better monetize and cross-sell a variety of products and grow their businesses going further. And within the banks, traditional banks, I think the technology has been a big investment area for most banks. And over there, some of the key private names like HDFC Bank and ICICI Bank are right at the front in terms of utilizing the technology to further grow the businesses. So to that extent, I think we believe that the amalgamation of between technology and the business, underlying business, which is at the face of it looks very sort of traditional as such, will continue, and it will go to, in fact, the usage of technology will only increase from here, and banks need to be pretty much positioned to ride this change, which is only going to accelerate from here.
Right. So keeping this in mind, what would be the pecking order here in the BFSI space? Do you prefer PSU banks, private banks, life insurers, general insurers, NBFCs, or the capital market play?
So we have been very stock specific firstly, and over the last few years we have been following that approach, and that's also because the earnings trend for the sector, if you see, is very divergent. You will look at the private banks which are now looking to grow at around 10% for FY26, PSU somewhere in the 5 to 7% earning growth range. But at the same time, there are banks who are doing a lot better. And their ROAs are holding up much better than others, and they are not as much impacted with the asset quality pressures, especially coming in from the unsecured segments. So we believe that over the next few quarters, this performance and the divergence will continue as the trends in earnings and the asset quality will differentiate one bank from the other. And to that extent, we like ICICI, HDFC Bank amongst the top private names. And amongst PSUs, we like SBI. And from the mid-sized names, we like AU Bank. But our overall bias has been more towards NBFCs and non-lending financials, as that's a space which will benefit from the moderation in the rate cuts, which is already on, and we believe that the cycle will continue to ease as RBI does more rate cuts in the coming months and quarters.
All right, sir. And when it comes to the overall BFSI sector, which are those companies where are you expecting, or which companies will lead the earnings growth, say, over the next 2 or 3 years?
I think earnings growth for the banks as such will bottom out in FY26. Last 4 years, we are seeing a one-way deceleration in earnings growth, and FY26 will mark the inflection point. And beyond that, from FY27, you will see a more broad-based recovery in earnings, and wherein we expect the sector earnings to recover back to 14-15% run rate. In FY26, we are still looking at a 10-odd% kind of earning growth for the banks. And there may be, I think, capital market companies and select NBFCs who will be a beneficiary of this moderation in the rate cycle, which can report better progression in terms of earnings growth.
So for banks, offered, if you see, credit growth has slowed down, NIMs were compressed so far. But going forward, what are the key triggers that would lead to solid earnings growth for them?
See, when you started with FY25, there was a complete sort of uncertainty as to what level the asset quality is going to normalize, because right after COVID, between FY21 to 24, the environment was very, very benign. And we did see almost negligible credit costs for many leading banks. And so then the trend changed in FY25 when one of the private banks reported a very high credit cost right in the first quarter. It was very uncertain as to how and to what level the asset quality pressure will show up. But having seen the 4 quarters of FY25 with the leading banks like ICICI and HDFC Bank reporting very stable trends, I think that concern is now diminishing. Already you have some banks and lenders like SBI Cards who have called out a peak on their credit cost. So to that extent, I think we are now looking at a very calibrated uptick in credit cost versus what we were factoring in earlier, and that will be supportive of the earnings growth. And secondly, as now the funding cost reprices, because some of the banks have already taken a cut on their SAR rates. Now, this is something that was unthinkable until a month or 2 months back. But now banks are able to take that step because the liquidity situation in the system has eased. I think the entire fixation or the scrutiny around the CD ratio has also eased down. And to that extent, banks are able to relatively deliver better growth. And also that is allowing them to reduce deposit rates. So as this now passes through and the deposit portfolio reprices, so maybe from FY27 is at a time when we think that banks will go to start recovering on the margin line. FY26 is still a year wherein we are expecting NIM pressures to continue, and that is partly one reason why I talked about a 10% earning growth in FY26.
Right, sir. And so when it comes to the MFI space or the small banking finance space, issue related to MFIs have impacted quite a few banking names. Do you see that the worst is now around the corner and things could start improving from here on?
Yes, MFI space, you are right, has impacted a lot of banks, and we have seen even double-digit credit cost in this space for the lenders, many lenders, and I think now under the new guardrails, at least the formation of stress, the forward flows will peak out in the first quarter, and the recognition of that stress will happen possibly over the second quarter also. But I think what is more important is the trend in collection efficiencies on a X-bucket basis. Wherein our view is that right from the second quarter, you will start to see an improvement in collection efficiencies, and therefore the credit cost should start to moderate from the second quarter or latest by the second half. So this year, we are expecting low to mid double-digit kind of growth in MFI by MFI players alongside an improvement in their operating ROAs. And that will also therefore drive the recovery in the MFI lenders and the underlying banks who are more exposed to MFI.
And so when it comes to the NBFC space, the rate cut cycle, which has already begun, 50 basis points cut, we have already seen 50 basis points more is what the street is expecting to come in. Which NBFC will benefit the most? Vehicle financiers, home financiers, or players like Bajaj Finance?
Our view is that vehicle financiers are best positioned to benefit from the ongoing moderation in the rate cycle, as their asset books are largely fixed rate. And so while the funding costs will reprice depending on how the duration of the borrowing mix is, but overall, from the asset side perspective, which is fixed rate, I think vehicle financiers are best placed. And to that extent, we like Shriram Finance and MMFS to play this moderation in the rate cycle.
And lastly, sir, the life insurance sector, if you look at the fourth quarter numbers for a couple of the guys were pretty much stable. In fact, the FY26 guidance that they have given also looks pretty much strong. But do you think the overhang related to the regulator's decision on bancassurance will continue to weigh on the share prices, or is the worst priced in for the life insurance sector?
I think the sector has been through a lot, and there has been a lot of regulatory changes, but the sector has shown a lot of resilience in adapting to the changes and still delivering a reasonable growth. There is a lot of potential in terms of the growth in the life insurance sector, and as you move forward, you will continue to see the stronger growth coming in some of the traditional businesses, and over there, we continue to like this space. And we believe HDFC Life, SBI Life are best positioned to play the sector.
Right. Thank you, Nitin. Thank you for joining us and giving us your perspective when it comes to the entire BFSI space currently. Well, moving on, auto space is another that has been in focus after Jefferies has come out with this note where they have downgraded their rating on Hero MotoCorp and Bajaj Auto. Let's get in Puneet with more details on the same.
I'll try and find some bull cases here as well, because we're seeing this note specifically on the two-wheeler space, downgrades on Bajaj Auto as well as Hero MotoCorp, and it's a trend that was largely based on the sales from December onwards visible in those numbers as well. So Jefferies downgraded Bajaj Auto to a hold from a buy rating earlier. Target price is now 7,500 versus 10,550 earlier. For Hero MotoCorp, the target price has been, it's been downgraded to an underperform rating from a buy earlier. Target price has been cut to 3,200. from over 5,000 rupees earlier. So two big downgrades here, maintaining buy on Eicher Motors as well as TVS in this particular note. Now, three key points that this note says specifically. They are saying that they are cutting two-wheeler industry growth volumes by 6 percentage points in FY26 and 2 percentage points in FY27, while largely seeing a healthy 10% CAGR over FY25 and 28, and that's seen in the premium category as well as for someone like Eicher as well as TVS. The second point that they're making is that the competitive landscape has effectively changed very meaningfully and significantly, with TVS and its domestic market share now at a 18-year high, while for someone like a Hero, their market share in the domestic two-wheeler space is at the 20-year low, and hence they are downgrading Hero in this particular note. They've also mentioned that while they're cutting EPS targets by 5 to 11% for something like a Bajaj as well as Hero MotoCorp, they are seeing just some slight pressure for TVS as well, just by 2 to 3 percentage points, but very bullish on Eicher as well, and the target price is hiked to 6,700 for Eicher Motors. So TVS as well as Eicher gets the big thumbs up from Jefferies, while Bajaj and Hero are downgraded going forward as well.
Mahesh, the entire auto space, which is your top pick, is it the auto OEMs or auto ancillaries? And if in auto OEMs, are you preferring four-wheelers or the two-wheeler manufacturers?
Our preferred pick is TVS Motor. We are optimistic for some more upside. As already explained, TVS is gaining more market share in terms of any other player. So TVS Motor is preferred. We can see some more upside from these levels, 2,850 to 2,900 odd level. And in the auto component, if you are looking for an auto component, then we are optimistic for Minda and Minda Corp. Both counter are in our watch list, and we are tracking the same. Minda, we can see some upside up to 1,150 to 1,200 odd level, and for a Minda Corp, we can see up to 575 to 590 level at least. So three counter are in our top list.
Right. The other big news in trade today was a deal between 360 ONE and UBS. Let's get in Harsh with more details on the same.
Yeah, so I'll break this deal into three parts for ease. First is there's going to be a strategic collaboration between both entities where clients of UBS AG, which is the German which is the Swiss giant, will also enjoy the advisory which 360 ONE provides, and 360 ONE's clients will enjoy services which UBS AG provides. So that's the one big synergy which will play out. The second piece is with regard to how will UBS AG benefit from 360 ONE and its growth in India, and that is going to happen through a 2,100 crore infusion of convertible securities which UBS is going to purchase from 360 ONE. So 360 ONE is going to issue these securities to UBS at a deal value of roughly 40,000 crore post pre-money and around 42,000 crore post-money. So they will own around 4.95% at the end of this. They will own around 4.95%. UBS AG will own of 360 ONE WAM, which is a listed entity. That's the second piece. The third piece of it is the takeover of the India business of UBS AG, which includes also other businesses which UBS AG has been incubating in India, including stockbroking, distribution, discretionary and non-discretionary, portfolio management. All of that, including the Credit Suisse business of India, which UBS AG owns, will now be hived off to 360 ONE for a consideration of 307 crore. The AUM of this business is around 26,000 crore. So largely a decentish kind of valuation that they've got on this business as well. So it's a three-part consolidated arrangement of sorts which has happened.
Mahesh, coming to you on this, any view on this transaction that has happened between 360 ONE and UBS?
I think that is this is a good sign for 360 ONE, and hope from this transaction customer will enjoy their services both side of customer, and from 360 ONE point of view we can see some upside up to 1,150 to 1,200 level, and collaboration sounds very good from my point of view.
Right. Thank you, Mahesh. Thank you for joining us and giving us your perspective about the markets and the stocks that we discussed. With that, it's a wrap on this edition of Top Trades on NDTV Profit. Keep watching. Stay tuned there.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The second buy pick is a Naukri Info Edge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're tuned into India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And let's look at the Nifty 50, how it's playing out intraday. We're up around 0.25% thereabouts, building on the gains of the last 5 trading sessions where we've stuck to the green, which is again a key positive. Let's look at the intraday chart on the Nifty. And there you go, just off the day's highs. And not a very wide band that the Nifty is trading in, just within that 200, 180 point kind of band that the Nifty is trading in. And therefore, in that sense, it's a decentish kind of move that we've seen. Let's look at the heat map as well on the Nifty. Some buzzers here, and HUL, and some stocks within that FMCG pack, including a Colgate doing fairly well for themselves, and M&M second day on the trot where it's done well for itself. So those couple of pockets, but the heavyweights within the banking pack continue to dominate. That's been largely the theme which is playing out in markets and continues to play out even today. Slightly less of a zing in terms of the advanced decline and the breadth as yesterday and what we've gotten used to. But nonetheless, the broader market's doing relatively better. So your advanced decline sitting okayish in that sense. Definitely a 2.5:1 kind of ratio. So therefore, nothing to complain about per se, because the broader market's largely aiding this advanced decline. Let's zoom into broader markets, see what the Nifty mid-cap and small-cap indices are doing. And surely outperforming the Nifty 50. The Nifty mid-cap index up 1%, Nifty small-cap index also up around 1%-ish thereabouts. So those pockets doing well. Even when you're looking at sectors, maybe plenty of sectors doing well for themselves. A realty and FMCG, couple of pockets doing well. You also have what's not doing well is an IT, maybe slightly softish kind of a day. Auto metals, after the kind of up move that we saw yesterday, still in the green, but slightly more tempered move of sorts from both of those. The Nifty Bank also holding decently well within this entire basket. So overall, it's a good day. The PSU banks have really come and taken center stage. In fact, if we can pull up the Nifty PSU banking chart for the intraday chart on the Nifty PSU bank, as well as maybe over the last 5 days, we've seen a good move from the Nifty PSU banks. Of course, from the highs, we're slightly off. We were up 2% plus on this index, but we're slightly off. But there are plenty of movers within broader markets as well. Neeraj, something like a KFin Tech, something like an Alok Industries on the back of numbers, plenty of movers, right? Even though it's not evident from the get-go that there are big ones.
Yeah, but 1% for the small cap 250 kind of lays out that point, Harsh. Interesting movers for sure. Sugar as a bucket has done really well. So Bajaj Hindustan, Balrampur Chini. I wonder if Renuka and the likes also are up in trade, but those two clearly were doing very well. A bit of a spike. I wonder if there is news here, but 4% up for Bajaj Hindustan. Balrampur, another 4.5% too. Renuka should come up on your screen. Maybe it's a UP-based thing, or maybe it is the broader sugar move. No, all the sugar stocks are doing rather well for themselves, so that's a bucket. Rajratan Global, Varsha spoke about it extensively, up about 20% in trade. Now for a better part of the day has been up in trade. Tilaknagar Industries, another one which is actually up about 12%, 12.5%. I wonder if HG Infra had a reaction to the battery energy storage system plans that it spoke about. Started off well, has cooled off a little bit. What's not done well? GNA Axle, Chola Financials, Sangvi Movers are amongst the stocks that have looked wobbly. Fusion Micro is down to the 4% too, as is RK Forgings, by the way. So some of the auto anchs are not necessarily having the best of mornings. So that's the other thing to keep in mind. But broadly, on an all cap index, much better advanced decline ratio, and that should augur well. Kush Bora, founder of kushbora.com, with us on the show to talk about the technicals. Kush, thanks for joining in. And for people who do not have a position, all right, what should they do on any of the key indices, the Nifty or the Nifty Bank? Can they trade it at the current levels?
Hi, Neeraj. First up, a very good afternoon. And as I've been saying for the last few days, that if you don't have a position, wait for the dip. I'll go one step ahead today and say if you don't have a position, it might not be a bad idea to either go short on Bank Nifty or perhaps even Nifty, but the Bank Nifty for that matter, or go ahead and take a put option for the current expiry. We are seeing overstretched levels on Bank Nifty as I've been speaking, at least on the very short-term time frames on the hourly charts, and the first crack is starting to appear where we are starting to see negative divergences. It's just that the PCR, is hovering around that 1.1, 1.5 mark, hasn't hit the overbought territory of 1.3. Also, if if you look at the VWAPs, both the Nifty and the Bank Nifty are dearly holding on to the, intraday VWAP. That's how we usually calculate VWAP. So it's been holding on to the VWAP for the most part of the day, and hence, you're not seeing that big crack appear. But it looks like it'll probably be a matter of time before some sort of profit booking comes in. Also, perhaps this is the expiry week, and hence, we're not seeing a major reaction to the global parameters as we've seen in the recent past. And if it's the expiry day or the expiry, or we're fairly close to the expiry week, this week being the monthly expiry also for both the indices, we don't have such a strong alignment to the global indices. But once that comes to pass, once that is over, you do see, that catch-up trade happening. So if it happens, with the expiry or, before the expiry or after is anyone's guess, but it's not a bad idea to perhaps, consider a short position. Long at these levels from a risk reward standpoint just doesn't cut it.
And you've been saying this, in fact, you said this yesterday as well, Coach, and therefore, I wonder, would you reckon that what is the downside risk to what you're likely saying? Is there still maybe a bit of more upside to go possibly before some of those downsides could play out, especially on the Nifty Bank, because you seem more bearish in that pocket?
No, great question, Harsh. In fact, let me admit, I've been a little cautious on the Nifty since 23,800, and we're up 400 points from there. Bank Nifty about 54,000. We are up about 1,800 points from there. But you know what? I'm not flustered for a very simple reason. The risk reward ratio from my a technical standpoint or a trading strategy standpoint just doesn't allow. So it's not that you have to compulsorily go out and take a trade. Also, we did say that if you have a position, then it's not a bad idea to continue to hold on to them. But from a fresh position, you might not want to consider. Also, let's not forget that this is perhaps a liquidity-driven rally. FIIs have been net buyers for the last 4 sessions, and as we're fairly all aware now, and FIIs can also be momentum chasers, and that's what we are seeing play out. So yes, there is a risk to it that you could see the Nifty stretch another 200 points from here, Bank Nifty another 600-700 points from here. But when the risk reward ratio is not in your favor, I mean, do you still go out and create fresh positions? Maybe if you really want to, but with a very small quantity. I mean, that's the only way if you want to play this trend. As far as I'm concerned, if the risk reward ratio is so unfavorable, I would rather sit out. And as I said, since the first crack is starting to appear, I wouldn't mind a small short trade on Bank Nifty.
Point taken. Kush, one stock in particular that I want your view on before we take your picks. M&M, it's been resilient in trade for the last couple of sessions. What's your take on this one?
Amongst the auto pack, this is the only one we like. I mean, Tata Motors, not so much. Maruti has had its moments, but tends to fizzle out. But if you're looking at it from, let's say, a 3 to 6 month perspective, it's not a bad idea. From a much smaller time frame, you might want to perhaps look at an accumulation, not a big trading position. The reason being the stock just crossed its 50-day moving average, and we've seen some pressure emerge around the 2850 to 2900 zone. So once that is in the clear, then you will see the momentum picking up for the stock. But up until then, there's a good possibility that the stock might continue to consolidate and be sideways. But that does give you that margin of safety that you're looking for in a stock like Mahindra & Mahindra. So yes, this is a good time to start accumulating. A positional stop near the 2600 mark, and then you're playing for 3000, perhaps even 3150 kind of levels. So yes, from a positional standpoint, Mahindra & Mahindra current levels does look interesting.
And your picks for this afternoon, Kush?
Sure, because of that cautious view, I think one short trade has to be in the mix, and what other sector than IT. So Wipro is a short call. We've had it since morning for the levels of 234 and 230 with a stop loss around the 242 mark. And on the long side, you've got Arcane Chemicals. The stocks had a very good run over the last 10 odd sessions on the back of good volumes, 200 moving average taken out yesterday and trading above it today as well. So for levels of 665, 685 with a stop loss at the 625 mark, Arcane Chemicals is long.
Point taken, Kush. Kush, the other pocket that's doing well, and I wonder if you have a slightly different view on this one, is the Nifty PSU banks. Would those at all be different from your view of the Nifty bank per se?
So, Harsh, broadly speaking, and if I just take that liberty of painting everything with the same brush, then the idea is that, the entire pack has run up quite a bit in a very short span of time, and hence you could see some sort of cooling off. But other than that, I think, the entire financial services space, and, we've been bullish on the entire financial services space for some time. I think any kind of dip should be taken as an opportunity to accumulate. You can't go and buy Canara Bank, Bank of Baroda, even SBI for that matter at current levels. So maybe a 1% or 2% or a little more of cooling off is when you should consider a long trade on the PSU back as well.
Okay, Dharmesh, thanks for joining in. Just quick word here. I mean, would you be a buyer in banks currently? Fundamentally, the conversation seems to be positive.
Yeah, good afternoon, Neeraj, to Kosh and to all our viewers. Yeah, definitely. I mean, this is a space which is seeing a good swing on the upside, both from trading and investment perspective. And all the macro factors are playing in for the banking space, be it the interest rate cuts, two has happened. Two more are expected. Inflation rate trajectory is down. RBI has changed stance to accommodative, and yesterday also LCR norms, which they revised. I mean, this is draft, which is yet to be implemented. But these things are auguring well, plus the tax benefit has started trickling down. So consumption will definitely is expected to go up on the retail side, maybe through EMIs and all. So my own sense is that traction will be continued, and among given a choice, I am more bullish on public sector banking space than private sector banking space. Reason being, if you look at the average growth of the advances in the public sector banking space, that has been better than that of private sector banking space with the same asset quality and more or less stable kind of a NIMS trajectory. Even the deposit rate cuts were faster this time than the lending rate cuts, so that will keep the NIMS intact. And there I think the catch-up has still to play out. Most of the public sector banks are trading at 0.7, 0.8 times price to book value 1 year forward. And there's an elbow room to go up. So like Bank of India or Bank of Baroda, Canara Bank, PNB looks attractive to me. I am just for avoiding SBI for the time being a large cap in that space. So banking is a space to look forward to for next 2 months. And let's not forget that IMD has come out with a better than expectation monsoon. So above normal monsoon, if all falls into place, this is likely to do well.
Point taken, Dharmesh. We'll switch focus from banking to actually EMS, and big boost for Dixon Tech. Reports suggest Google could shift some production of Pixel from Vietnam to India, which could garner revenue, roughly a revenue opportunity of 9 to 10,000 crore for Dixon Tech. Puneet here to contextualize that for us, 6% move on the stock, Puneet.
Definitely, and if you look at post the tariff impact, the stock was at actually 13,000 odd levels. So it's really boomed in the positive side, and as you rightly mentioned, could be because of some potential production being shifted of the Pixel smartphone from Vietnam and China essentially to India. Now, the key aspect is that, it is part of the de-risking strategy for, Alphabet, which is the parent of Google, in terms of the sourcing of these particular smartphones, and localization of some components for the Google Pixel could also be on the cards. Now, Dixon definitely would be a key beneficiary of this particular aspect because they had signed an agreement to make the Google Pixel in India back in December of 2024. Now, Dixon has an indirect, agreement essentially with Compal, in which they signed in February of 2024 to manufacture these phones in India. They were essentially, of course, to first manufacturing partnership essentially with Compal, and Compal is one of the world's biggest EMS players and leading manufacturer of notebook and as well as smartphones and PCs. So Dixon has a manufacturing agreement with Compal, and with that they can manufacture the phone in India. Now currently the Pixel sells roughly about 1 crore phones that they sold in 2023, so it's a sizable opportunity. If we can contextualize that in terms of revenue, even a 30% shift of production from Vietnam to India would roughly be a 9 to 10,000 crore opportunity, as you rightly said. Nomura is assuming that 60% would go to Dixon, because we also have something like a Foxconn with manufacturers the Pixel in India, but they are anticipating Dixon to be the biggest beneficiary as well, and that's one of the key aspects. So we also spoken to the management a few weeks ago, and they mentioned they're anticipating a 150 basis point margin impact over the next 2 years. So all these signs, baking in very good estimates for Dixon, and I think that's where the market is preempting some of these positive moves, which could be contextualized in this particular results as well.
Interesting. Thanks so much for that, Puneet. Dharmesh, let me come to you right away on that one. This entire EMS basket took a bit of a beating over the last couple of months at the very least. What's the sense like at this point? Risk reward favorable, or do you believe it's stretched?
Yeah, good afternoon, Harsh. I mean, the entire EMS basket has been running on the news flow, the positive news flow surrounding them, and even they have been revenue accretive as well. If you look at Dixon Technology, it's been growing at a CAGR of 30-35% for the last 10 years, and that has been maintainable. So to get this CAGR materialized in the near future as well for next 2-3 years, you have to have this kind of order inflow coming in, be it Google or be it somebody else. So otherwise, you can't have the same run rate going on your top line. So I think it's a part of the business model, and they have been doing fairly well. And if you look at the EMS segment, naturally, if you speak to any of the promoters, the maximum growth they can do year on year is 35 to 40% only, because of the capacity constraint and the new technology and everything which has to be put into place. So keeping that in mind, I mean, it's a trade today, it's playing out. It can play out for a couple of days more, but just have in mind it's a low margin business, 4 to 5%. 150 basis point improvement leads to your 5.5% kind of an operating margin. And valuation, it is trading at around 160 times PE multiple. So there has to be, at a point will come when such kind of a justification has to come into play. And this was the valuation concern which had a serious sell down happening. But given the uncertainties which is surrounding the global environment, such news flows for EMS company, at least in the short term, will find bias and the trades are up. From investment perspective, I think new investment should be avoided now.
Okay, that's the view on Dixon. Dharmesh, also wonder if there's a view on some of the auto counters. Something like an M&M has done very well for itself, and the overall index too is up now nearly 10% from the recent lows, and therefore would auto at all feature in your bucket, something that you're looking out for?
Yeah, definitely. As a trade, it has come into the buying radar. M&M has been doing well, and the recovery index is more to do with large caps like M&M, Maruti, and Eicher Motors, which has pulled the index up. But there are pockets like two-wheeler segment. Hero and Bajaj Auto, one of the MNC brokers have even downgraded that today. I mean, yesterday they have done that. But to my mind, I think this is a right time to get some accumulation from a trade perspective, at least if you are looking for 3 months kind of a time frame. And the reasons are simple. I mean, you have the tax cut in the budget. From April onwards, it will pay in your salary checks. And then you have interest rate cuts. 2 has already come. 1 or 2 is expected in future. At the same time, you have this monsoon thing coming in, which is likely to be a better off. So I think with rise in disposable income and with tax reliefs happening, people will be consuming, because this is the time when the consumption will happen. To there, I think with the valuation correction already happened quite a bit. It's a deep valuation correction which has happened in both Hero and Bajaj Auto. Both of them look attractive, but given a choice, I will play the India theme, because it's a marriage season also. East India, North India see a flurry of marriages happening in the month of April, May, and June. So looks attractive to me for say 4100, 4200 kind of a price level Hero MotoCorp. So that is what we have recommended to our clients. I mean, yesterday only we have initiated a buy on that.
Okay. Dharmesh, rather Kush, actually, first to you. A bit of a late last half an hour surge in a different pocket, which is sugar. It's just gone out of any realms of conversation, rightly so maybe. but there's a bit of a spark today in some of those names. Anything worthwhile?
Only Balrampur Chini. This is the one stock that is present in the F&O space, has a fairly decent. It's not in F&O actually anymore. Was for a while now, but has fairly enough decent volumes for you to trade in. So it's clear that 570 resistance mark. The volumes are also up, as you rightly said. The entire sector seems to be doing well. But from a technical standpoint, this is in the clear of a lot of the key averages, be it the small term or long term resistance zone, also taken out after a consolidation of 10-15 odd sessions. So from a momentum perspective, not a bad idea to maybe consider a small position in something like a Balrampur Chini for levels of 610 and about 635, and the 570 resistance will now act as a stop loss, so that should be your support. But that's perhaps the only one. The reason I say a small position is because you know how volatile this entire pack can be, and usually doesn't feature, at least on my radar in terms of calls. So if you must, then Balrampur Chini is the stock that you should stick to.
Okay. Dharmesh, any commodity plays that you are constructive on?
Yeah, not on agri, but on the metal space, yes, and that too on non-ferrous metal. Like though government has come out with a safeguard duty on steel, but to my mind, I think it's the non-metal, I mean non-ferrous space like copper, zinc, aluminum that is going to do well in the current world setup. And there, I think Hindalco looks pretty attractive. So even if there is some recession in the world, you consume more of a food. So Hindalco has an option of supplying cans to all beverage drinkers. So there, the pickup is high. Copper has been doing fairly well in the international market. The prices have been up this year till date. So that is also going to trickle down. And there are a lot of debottling practices have taken place in Hindalco plants in India. So that operating benefit will come out, operating efficiency benefit will come out there. So I think it's a decent quarter they would be reporting this time around, and going forward, it looks attractive to me. So that is one stock which we are keeping a radar on, and maybe 5-10% kind of an trading upside can materialize out there.
And Dharmesh, I'll stick with you with regard to a view on KFin Tech. It's an interesting play within financial services. And what's the sense like? Do you have a view on this counter?
See, Harsh, I have a general view. Any fintech plays which is related to financial sector, so we are completely avoiding those plays. And one is the valuations are too high. At the same time, there are too many regulatory changes which are about to come by the RBI. So most of their profitability, which is there as of now, which seems likely to materialize in future, won't be there. So I mean, these are just on the guidelines kind of rules are there. Once they are implemented, there would be trouble, and there are many things in the up there in the shaping as well. So as a house, we have taken a call to stay away from all fintech kind of plays out there in the market.
Okay. All right. So that's the view on KFin. Yeah, quickly, Kush, if you can give us a technical view as well on KFin.
Stellar move actually. In the last 4 sessions, from 1000 all the way up until 1275, close to these levels where it is at currently. The volumes on the last 3 sessions have been staggering. So definitely, some heavy accumulation going on, in this one. Also, it's cleared the resistance, around the 135, 140 mark. So I think this momentum could very well take it higher. From a positional standpoint, I think, you should look at 1350 and about 1420, 1440 as the next target. So not a bad idea to hold this, but from a positional standpoint, a slightly deep stop loss, 1160, that should act as your stop loss. But as I said, all set to clock, the levels of 1400 and higher.
Point taken. So positive, at least on technical indicators, KFin Tech. Now, in terms of the earnings season, well, plenty of movers on the back of the numbers starting to come through. And let's take a look at some of the, at least buzzers on the back of numbers. Varsha here with a couple of them. Varsha.
Thank you for that. Let me start with Mahindra Logistics, wherein if you see the numbers, revenue was up 8.2%. Now this was driven by growth in third-party logistics contract, and if you see EBITDA is up almost 37%. Good uptick in margin, at 5% versus 3.9% last year, and the loss has narrowed down. So the net loss for Q4 FY25 stand around 6.7 crore versus loss of 13 crore last year. Now the supply chain management grew by 8.6%. Enterprise mobility solution remains flat at 80 crore. The B2B express saw volume recovery, and cross-border business continues to see volatility in pricing, and also they've appointed Hemant Sikka as MD and CEO. So the losses are narrowed down. Good uptick when it comes to operational metrics like EBITDA margin. Next on the list is Alok Industries. Well, the stock is up like 18-19%. Now this is on the back of the numbers that they've posted. If you see, revenue is down 35%. There was an EBITDA loss of 23 crore versus profit of 5 crore last year, and the net loss was at 74 crore versus loss of 216 crore last year. Now the net loss that you're seeing, which has narrowed down, this is on the back of good growth in other income.
Okay. Thank you for that perspective, Varsha. Kush, firstly, a quick take with regard to Alok, 18.5%, very strong move.
Yeah, I mean, the trade from a near-term perspective is done on this one. So you might want to wait up, for a correction, let's say close to the 18.5 to about 18.25 thereabouts. And if you do get a dip towards those levels is when you should consider. If you have an existing position, I would in fact suggest, booking partially, at the current level and holding on holding the rest for about 21 kind of levels. But fresh position should only be considered, at any kind of dip towards the 18.25 mark.
Okay. And Dharmesh, with regard to these logistics companies, right? They've had their fair share of headwind, but now given the fact that we are likely seeing some bit of easing with regard to at least global crude prices, which should hopefully also percolate down and impact the numbers of something like a Mahindra Logistics. Stock is down 28% in the last year or so, even more impacted when I'm looking at it from the 52-week high. Any interest in any of these names, and is there a preference in terms of names as well?
Yeah, Harsh, I mean, hopefully is the right word. So it has not percolated yet. At the same time, they are facing their own headwinds in many ways. So, I mean, there are many segments to a logistic company. One is B2B, then another is B2C. And many of the companies are setting their own logistics systems in place. Mahindra is one of them. And I mean, there's not much juice left here. I mean, the story which started 10 years back, it has not played out to that extent because of the disruptions which has happened in this segment. And that's the reason it can be a trade for a day or two, but I don't think it's a structural, cyclical wealth creation kind of a buy any out there. Rather, if you have to look at logistic company, I mean, you can look at ports like Adani Port, I think is one of the best place and valuation comfort as well. So if I have to buy for a wealth creation kind of a perspective, I would rather be buying a Adani Port rather than, this logistic companies which are into B2C or B2B supply chain management.
Okay. So probably that's the better play. But thank you so much for that view coming in. You know what we're going to do? We're going to slip into a very short break. On the other side, we'll have, of course, Kush and Dharmesh, both of them still with us, and we'll take more views. We'll also have Heard on the Street. Mind you, we did one yesterday as well, as we do daily, and that one's proved to be right. So we'll discuss that piece a little bit more, and we'll take more views from both Dharmesh and Kush. Stay tuned.
second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Welcome back onto our special segment, Heard on the Street. Now, this one has become a regular feature of Somit getting it right. So, a couple of calls that have played out today, and correctly so. Last week, the call, Somit, with regard to Colgate and 361 both. Now, a point being that with regard to 361 in particular, it is a big deal, right?
Right. It is a big deal, and more importantly, it's happening at a premium, which means that, in fact, there was this funny thing that was going around on the street that UBS at one point of time had a target of around 1350 on 361, and they're buying this company at 1,030 rupees. So yeah, that's the thing that was going around in the market.
Good stuff there, Somit.
Yeah. Cool, thank you. Okay, in today's talk, if you look at IT's, and select IT name is something that has been interested in dealers. In fact, IT as an index, if you look at it, has been gaining for the last 4 consecutive sessions. Today is only sectoral index which is down in trade, but few names which dealers are highlighting could see high delivery-based buying in trade today. That's Coforge, Persistent and Tech Mahindra. Despite the weakness that we're seeing in big names, these 3 stocks have been gaining in trade. Apart from that, IIFL Finance, buy flows on DI desk is what the dealers are indicating. In fact, a leading mutual fund has been an active buyer in trade in IIFL Finance, and that is one of the reasons why IIFL Finance is one of the top gainers in FNO names in trade today. And apart from that, lastly, it comes to Zydus Life and Lupin. Multiple dealing rooms today are giving positional buy calls for both these names, Zydus Life and Lupin. They believe that the worst seems to be priced in for both the counters. Few days back, both of them had seen a sharp fall in their share prices post the adverse ruling that we had seen in the US court related to one of the key drugs. But dealers are indicating that the worst seems to be priced in, and positional buy calls is something that multiple dealing rooms are advising their clients for Zydus Life and Lupin.
Interesting one.
2 specific names, that's interesting.
Yes, and you also have IIFL Finance, and then you have IT companies.
Of course, yeah, but on Pharma, I'm saying 2 specific names is the interesting one.
Yes, it is. And this is more to do with the fact that you had a drug suspension which happened, right?
Yeah, a few days back we had seen a sharp fall on the back of that one drug issue that had come in. But right now they believe that worst is priced in, and these couple of these stocks could benefit now going forward.
So it's more to do, I believe, with that. Yeah. So let's probably ask Dharmesh. Dharmesh, do you have a view on a Zydus Life and a Lupin?
No, I don't have a view on any of them, but the pharma as a space is a very dicey one as of now. You may be getting news flow day in and day out, and the trading activities may still happen. But I think unless Mr. Unpredictable, that is the US president, he comes out with a policy on pharma, which he has been saying time and again, there is a tariff which will be levied on that. Unless that is out, you cannot take a structural call on the pharma space. Though there are great companies out there, but I think like Arvindo Pharma or in fact Lupin itself is a good company. Sun Pharma is there. So we have our eyes set on there, but we'll trigger a buy or sell only when the clarity is there on the tariff thing, and that's hanging sword as of now.
Okay, I take your point there. And what about an IIFL Finance, Dharmesh? Buy flow seen here. Interesting, the stock is also a bit beaten in that sense from the highs. It's come off substantially. Of course, the 6% move, near 6% move today is interesting. What's your take with regard to something like an IIFL Finance? In fact, NBFCs in general, Dharmesh, have done well over the last few days, right? So maybe your quick take, is it a good time to buy at this point?
Yeah, definitely. Just get your companies right when you are selecting an NBFC space, because the first beneficiary of any rate cut is the NBFCs, which tend to benefit the most from any rate cut cycle setting in, and we are in for that. And one good thing which has happened for NBFCs is the collection efficiency ratio, which has gone down to 87, 88% for most of them, has shown a good uptick in the month of March and continuing April. It is now up to 92, 93% kind of a thing. So that microfinance kind of a problem, the expectation that it will spill over to other segments has not happened, and there's an improvement out there. So as a basket, it looks good. Just be a bit selective of your choices when it comes to valuation.
And what's the view with regard to IT, Dharmesh? Just tempted to ask because you've got two big names which have declared numbers plus given out commentary, and then you have HCL Tech coming out with numbers today. So,
see, to my mind, IT is sell on every rise.
Okay.
The reasons are very clear, because last 1 year, though there was stock price action, but I was never a buyer on IT and I have been very vocal about that. Fundamentals have still not turned for IT companies. And see, in the short term, whatever tariff measures has been taken by US, it is the US which is going to suffer the most in the short term. Medium to long term, things may change over a period of time. But in that suffering, our IT exposure is primarily to the US market. 60 to 70% of the revenue comes from there. So how can you expect them to do better when they are still to come up with AI related product? So too much of a dark cloud right now out there. Avoid it. You may get trading bounces because of some currency movement here and there and some news flow, but it's not a buying sector at all. So one sector which we are totally avoiding for any buying recommendation is the IT space.
Okay. May make sense also. Okay, fair coin. Bucket of stocks which are not doing well despite a lot of calls in the morning, and one of them is Suzlon, the other one is Adani Green. Khushbura, on both of these multiple buy calls are not quite shaping up well today. What would you do here?
So again, yesterday we discussed that Suzlon does
hitting
look
a
like
supply zone.
Yeah, absolutely. I mean, and it's actually coming back to that level, 15.9, thereabouts. So while it did cross that level yesterday, it hasn't sustained above that. So, you might want to perhaps take some money off the table in Suzlon. Adani Green also, you're right. There is a sideways movement going on, albeit with a positive bias, and there is an ascending triangle formation. So above 990, if the stock manages a close and if the volume support, then I think, you'll see further momentum. But up until then, I would suggest holding on to this one because the bias largely is positive. The stop loss here will be about 925. Versus this, I would rather suggest, an Inox Wind, which is actually, seeing quite a bit of positive momentum. Even today, if you see, the stock is actually, recovered quite a bit from, the low point of the day. This one's also coming up to the resistance level of 178, but even that is some distance away. So you might want to consider an Inox, Wind kind of a stock over Suzlon, at least, at this current juncture where Suzlon is starting to see some profit taking.
Okay, so those are some views coming in. But let's get across and talk about our stock of the day. The top stock of the day is Colgate for us. We're focusing in on the counter because there's been some smart moves. Stock up 4% odd. And this is on the back of a UBS upgrade also, which has come through, which we spoke about last week with Somit. So let me put that out of the way. Hiral here with more on that.
Thank you for that. So clearly a UBS upgrade coming in for a Colgate. If you see in terms of their target price increase, they've hiked it to 3,100 from a 2,240, and it's a upgrade, you could call it a double upgrade to a buy from a sell as well. Now let's understand the growth narrative with regards to where Colgate goes. Overall, if you see in terms of the cycle, Colgate has come out from a disruption cycle, and this is with regards to their strategy in the premiumization space. Secondly, they're aggressively shaping up the oral care market as well, and that's specifically to do in the urban market where they are focusing on the premiumization aspect, and that is what has led to a market share reversal. If you see in terms of their market share trends as well, and this is going back to 2014 to 2024, in the last 10 years, from a 53.8% market share that they had in 2014, it actually came down to almost around 42.7% in 2019. And from there on, again, it's on an upcycle where last 2 years, or I would say from 2022 to 2024, it's in that bracket of 42.8% to a 43.4%. So that's with regards to the market share reversal that they're seeing. Now, the other strategy that they have deliberated on is normalizing the EBITDA margins. And what they've said is that they will be normalizing it in the range of around 30 to 31%. So in the fourth quarter of FY24, they did hit a high of almost 36%. But with the premiumization strategy to garner market share in the urban markets, they've clearly come out and said that they will look at margins in that range of around 30 to 31%. Now let's look at the earnings dynamics from here on. Firstly, what UBS has also indicated is that the earnings are at an inflection point. The earnings growth for the next 2 quarters will be negative. However, revival is expected to come in from next year, and a double-digit earnings growth is going to return from the second quarter of FY26. That's the expectation with regards to Colgate. Talking about the valuation story as well, there has been a sharp correction in terms of valuation since October 2024, and current valuations are seeming reasonable as compared to the sector valuations. If you see in terms of the stock price as well, it's seen a drop of almost 30% since October, and it had already risen by around 65% since 2022. So after that 65% rise, a 30% fall, and now the valuations are reasonable. So from here on, a consistent compounding story is what UBS is alluding to. Now, lastly, few factors what are working from here on. It's the strategy with regards to where rationalizing margins in the 30 to 31% range is what is working. Their volume growth has structurally rebounded as well. The pricing strategy is also shaping up in a premiumization-led volume story. And if you talk from a current valuation perspective, it is within its long-term averages. So factors, all of them firing in favor of Colgate right now.
Yes, 360.
And Dharmesh, how do you approach Colgate today? Of course, FMCG by and large has got a fairly big leg up too, per se. A clutch of other stocks are also moving. But Colgate, what's your view here?
Yeah, as far as Colgate is concerned, it does give you a trading opportunity right now. I mean, within the range, it can give you a 7 to 10% kind of upside. The story, I mean, the threat which happened when the Patanjali came into the play, that is no longer there. It is back to its normal, consistent growth story as far as market share is concerned. And valuations are pretty reasonable. If you look at a company which is throwing you an ROE of say 70-75% with 30% plus kind of an operating margin, available at less than 50 P multiple. I mean, this fee for less than 50 P multiple can easily go to 55 to 60 P multiple in the times in which we are trading this market as of now. So you don't know when the adverse news can impact the market, but this stability of consumption is likely to be there with Colgate. So yeah, a decent buy. I mean, just for a seasonal buy for 3 to 6 months, it looks good to me. Say 2,900 or 3,000 kind of a price target level.
Okay, Dharmesh, we'll leave it at that. Thanks much for taking the time out. Really appreciate your time.
Thank you so much.
Okay, metals is okay. I mean, there is a Lloyd's which is doing well, but not every metal name is doing well for itself. But there is a surge in specific pockets. Now, I want to bring up Avalon Technologies. That stock is up 9% in trade. Big surge in trade today. I wonder if there is a specific reason for this to happen or no, but clearly when we said that some specific tech names, Persistent, etc. are getting it, Avalon is a different kettle of fish, of course, but it's gotten a very large move going today. So certainly something to watch out for. Kush Bora, any thoughts here on Avalon after consolidating near 600 at a point of time when the rest of the tech pack has been kind of quiet? This one has given, what, nearly 50% returns from the March lows.
Absolutely, it's an outlier. And even now, if you ask me, I think the momentum is here to stay. There is still a bit of upside left, at least from a trading perspective. So you could still see the stock moving to 950 and about 995 kind of levels, in the coming days. Has still not hit overheated territories. And what's interesting is that after a steady up move over the last 2.5 months, the volumes today have spiked up. So yeah, I mean, for all the money, there could be a trigger or a news that might just perhaps come out. But as I said, even from a near to medium term perspective, 950, 995 moves cannot be ruled out. Keep a strict stop loss near the 860 mark.
Got it. Okay. Kush, quick word. If any of the metal names excite you, steel in particular.
The one that does, I mean, from metals, overall is the one that you've already mentioned, Lloyd Metals. In fact, if I'm not mistaken, the last quarter, this has also seen some, uptake in terms of the FII buying as well. Price moves have also been very encouraging. Right now, it's coming up close to the resistance of 1350. But I suppose once that is taken out, 1400, 1450 odd levels are very much on the cards. So Lloyd's has definitely been on our radar for some time. We've initiated a couple of calls, a couple of times, calls on Lloyd's Metal as well. The other one that is looking good is Jindal Steel and Power. If you look at it, the move has been quite contrary to what the rest of the sector has done. In the last couple of days, it's taken out all the key averages, be it the near or the medium term ones. So this move could well continue for levels of 935 and 960. And the stop loss comes in at about the 890 mark. So Lloyd's Metal and Jindal Steel and Power, these are the two that I have on my radar.
Well, and metal certainly in focus, but steel in particular. A positive development that has happened is that India has imposed 12% safeguard duty on steel imports. Duty's been the talk of town since last year, and the 12% number was first recommended in March this year. We are now joined by Mr. Sandeep Pondrik. He's Secretary Ministry of Steel, to give us his view on all the developments. Sir, thanks so much for taking the time out. Is this the first or the second of the many moves that the country would keep on doing in order to quote-unquote safeguard the domestic steel industry?
So yes, as you know that this is a provisional safeguard duty. DGTR had recommended provisional safeguard duty of 12%. So government has accepted that recommendation and Ministry of Finance has notified that yesterday. Now DGTR will finalize its investigation, hear all parties and give its final recommendations approximately around August, I would expect. So then government will take a final decision both on the period of duty, that is how long they will be in place, and secondly on the rate of the duty. So this is a provisional decision for 200 days. After the DGTR's final recommendation, government will take appropriate decision on safeguard duty.
12% numbers, sir. I mean, since morning we've been speaking to people and there have been debates about the number. So is this 12% a factor of the pricing differential that exists, which I presume was about 18%? So how has this number been arrived at, sir?
So basically the industry, the steel industries, they represent before the DGTR about the injury being caused by low-cost imports and dumping. DGTR takes that data into consideration, makes an investigation, and then basically arrives at a number in which, in its opinion, is adequate to safeguard the interest of the domestic industry. DGTR has provisionally found it to be 12% based on whatever data was presented before it by the industry as well as whatever data DGTR has. If certain new data is presented or certain new facts come into consideration, then DGTR can take that into account while giving its final recommendation. We also have to see that steel is basically not an end product mostly. It's used as an input to end products. So that also government has to balance that the cost of end products also remains reasonable while simultaneously protecting the domestic industry against low cost dumping. So it's a balancing act for the overall economy.
Mr. Pondrik, this is Harsh also joining in. What's the take like with everything evolving globally? Because there's plenty of moving parts, especially from China, because a lot of this will depend on how China responds with regard to everything that's happening. What's your quick take with regard to the impact of the global situation?
So basically, I will only talk about the steel sector. Out of about 1.8 billion ton capacity in the world, 1.1 billion ton is with China. India is at number 2 with 200 million tons roughly. So yes, the Chinese exports or cost of their exports impacts the international market. What we have seen in the last year is that of the 9 million tons imported into the country, steel imports, 3 major countries were contributing the most: China, Korea, and Japan. So if because of the international situation, the international prices of steel go down further because of excess production or other reasons, then it will have an impact on imports in India too. And I'm sure that when the DGTR makes its final investigation, they will take that into account if there are any changes in the situation. For now, I would think that the present duty seems reasonable for the domestic industry.
Got it. My final question, sir. If indeed this tariff war stays the way it does, and if indeed the exports of some of our neighboring countries and otherwise to US or the other end consuming countries, which were the top consumers in the past, doesn't quite happen in the same way, there might be more supplies that might be exported / dumped into our markets and other markets too. So are we open to adding substantial other forms of duties as well in the ensuing next 6 to 9 odd months, if need be? Is that a consideration?
I would say that so one safeguard duty, which is on all imports, irrespective of from where the steel is coming, so that has already been imposed. There is second, which is a basic custom duty of 7.5%. That's already in place. It doesn't apply to countries with which we have free trade agreements. So about 60% of imports are from FTA route, so it doesn't apply to that. Third is basically if from some countries low cost steel is being sent to India. Certain anti-dumping investigations are in place. 2 investigations, the DGTR is, the hearing has been completed, so they are almost at the final stage. One is for hot rolled coil from Vietnam. The other is one more steel grade from 2 countries. So there the government will basically DGTR recommendations. Let us wait for what the anti-dumping investigations lead to. There are 2-3 types of steels where anti-dumping duties and countervailing duties are already in place for specific countries. So that is one. I think another thing which government is trying to ensure is that we do not get low quality steel. So while cost is one parameter, other thing which the country has to ensure is that because we are ensuring that domestic steel adheres to BIS standards, we would also want to ensure that whatever is imported is of BIS standards. So that's another way to discourage low quality imports into the country from certain countries. So these are all the measures being taken by government to ensure that only quality steel is produced or imported, and second, that domestic steel industry, especially in view of the fact that we are the only major economy where double-digit consumption growth is taking place for last few years, and we need to add another 100 million tons of capacity in next 5 to 6 years. So that will basically need capital from the industry, and for that we will have to ensure that they get a level playing field on the international market.
Points well noted, Mr. Pondrick. Thank you so much, sir, for joining in today and giving us the perspective.
Okay, thank you so much.
That's, a proactive sounding Steel Secretary talking about all the measures that have been taken and could be taken in the future as well in order to help the domestic industry, capex plans and more. And the steel stocks have had a fairly decent start, but since then, SAIL and some of the others have certainly cooled off for sure. We took a view on metals, so we'll skip that. Move on to the next topic, and that's Hero MotoCorp. It's in spotlight as the stock has corrected after brokerage from Jefferies downgraded it and cut the target price up to 37%. Now, Puneet Johnson to talk about the bull versus bear case for Hero Moto. Puneet.
Well, thanks for that. Definitely the key trigger today was the Jefferies note that's taking just the sting out of the stock today. And the key aspect is, what they are penciling in is essentially they've downgraded the stock to an underperform rating from a buy earlier target price now at roughly about 3,200 from 5,075 earlier. Now the key aspect, is slowing domestic sales for the company, and that is one of the key aspects. They've also cut the EPS target by 5 to 11% for Hero MotoCorp in FY26 and anticipating a slower growth in this year. While on the bull side, currently the valuations are just 15 times price to earning for FY26, the lowest it has been in the last 5 years, and hence it could be a very interesting opportunity going forward as well. The second bull and bear case for Hero MotoCorp, we have seen that the company has launched multiple premium motorcycles in the 200cc range, as well as the new scooter, which is the Zoom 125. The 160 is also on the way, so they're increasing the premium share, which should help revenue growth as well as margins going forward. But the market share of the company currently is at a 20-year low in the domestic two-wheeler space, and exports is a very small percentage for Hero, so it has nowhere to hide in terms of outperformance, and the company's sales growth essentially has been very low. So if you look at the third and final bull and bear case for the company, it's posted the slowest sales of just 4.9% amongst the other 4 listed peers. The highest was for Eicher Motors at 13% for last year. So it's a huge differential in terms of growth. We mentioned the valuation for Hero in terms of comparison. Bajaj is at 23 times price to earnings for FY26. Something like TVS is over 37 times. But I think this will be driven essentially by the growth prospects for something like a Hero. We're seeing the scooter segment is doing better than the bike segment, and hence that is also weighing in on Hero. So essentially there's nowhere to hide for the company, but currently Jefferies downgraded the stock today in trade today.
Okay, thank you so much for that very comprehensive view, Puneet. Kush, quick take with regard to a Hero.
Well, the stock's actually corrected quite sharply, 78.6% retracement. Actually, it's taken support there and it's attempting a revival. Compared to the peers, this doesn't stand pretty. So, if I were to pick, then I would actually go with something like an Eicher Motor or a TVS. Hero would perhaps rank third just above Bajaj Auto. So that's where you are. But if you have a 6-12 month kind of a horizon with a stop loss around the 3,500 mark, or much higher levels of 4,100 and perhaps even 4,400, you can consider. Momentum will be missing, but from a bottom formation and a recovery move from a 6 to 12 month perspective, this could turn out to be a good buy.
Okay, interesting. All right, thanks so much, Kush, in fact, for joining us this afternoon. We'll let you go on that note. Thanks for coming in and speaking with us. But with that, we'll slip into a very short break. On the other side, fresh views coming in. We'll have a couple of new guests and we'll take top buy today, sell tomorrow picks as well with them. Stay tuned.
The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Okay, welcome back. You're watching India Market Close here on NDTV Profit. Neeraj, one thing that stood out, today morning was the fact that 361 announced a multi-pronged transaction. But the crux of that transaction was the vindication of the fact that Indian business, at least from a wealth management standpoint, seems to be doing quite well, because if UBS AG is looking to invest a 5% stake in 361, largely means that industry as a whole, 361 in particular, but industry as a whole also seems to be headed in the right direction, right?
Well, the market leader is speaking, so let's go across to Karan Bhagat, founder and MD and CEO at 361, who joins us right now on the show. Karan, this is Neeraj here. I hope you can hear me.
Hi Neeraj, how are you? I can hear you.
Okay, just a second. Maybe I couldn't hear Karan. Okay, Karan, can you give me a count again, please?
Can you hear me?
Yeah, loud and clear. Karan, congratulations on this, and thanks so much for joining in and speaking to us. Having seen what you've done since 2008, this doesn't come as a surprise. I'm sure the ambitions are larger. Could you take us through the crux or the reason for this transaction to happen? And then I have a part two, which is what's the way ahead?
Thank you, Neeraj. Thanks for all the kind words. I think the reason for the transaction is quite simple in some senses. I think the first and the most important reason for the transaction is to ensure that we continue to give our clients the best potential platform across both their Indian assets as well as some of the assets they want to invest overseas. Secondly, obviously, from a culture perspective, both UBS and 361 have had client centricity at the heart of their offering, and not only that, I think just the way of doing business in terms of advisory, asset allocation, building an investment process. I think UBS AG has had tradition and history over the last 30 to 40 years. I think we obviously would do well to learn from them. I think both those things combined together with the culture of and way of doing business are important tenets and principles of kind of setting up a collaboration agreement. Once these two things obviously are set in place, then the collaboration agreement really comes in terms of more specific opportunities, which would include our clients being able to access the global platform of UBS in a more productive and a more prolific way, as well as UBS global clients being able to access India in a more accurate way through 361. And obviously, to ensure that both of us are on the same page, we've kind of entered into an exclusive agreement for this purpose. And by virtue of it being exclusive, we've also gone one step ahead and ensured that the UBS AG India business is kind of transferred to us. And at the same point of time, UBS AG has ended up taking a 4.95% equity stake represented through warrants in the India business. So all in all, I think from a principles perspective, first principles, getting the reason and the objective and the alignment right. Second, getting the culture portion right. And once these two are set up, I think the rationale for all stakeholders, employees, clients, as well as shareholders become important and relevant. And once these are achieved, really, we need a strong collaboration agreement to get the maximum value.
Maybe cursory question, but does UBS AG stop at 4.95, Karan? Is this the initial transaction, and could there be future transactions to follow? I'm not saying there will be, but could there be?
Honestly, it's an open question, and obviously, I think the answer to that question is there are no specific plans now. Having said that, that does not preclude a possibility of it. So honestly, there is nothing decided now, neither a yes nor a no. I think, as I said earlier, for us, operating on first principles is important, and no reason why we shouldn't grow together, provided we get the operating first principles right into execution.
Right. Karan, Harsh Saita also joining in. Karan, a quick question with regard to what do you do immediately with the 2,000 crore which you are receiving from UBS AG? Is there a plan?
So I think, Harsha, the money would come in post-regulatory approvals. I think it's a 6-month odd process, anywhere from 3 to 6 months. I think of the 2,000 crores, obviously, I think 300 odd crores kind of goes into buying the UBS AG India business. We also kind of transfer a small part of their loans to the clients, but for that we don't necessarily need equity. But out of the remaining 1,700 crores, pretty much like what we did with the QIP, I think 50 to 60% would go into kind of enhancing the capital position of our lending arm. The remaining 20%, 25% would go to increasing a little bit of the capital market brokerage margins. We've just acquired a business called B&K Capital, which is also awaiting regulatory approvals. And the last 20-25% we will use as sponsor capital for our alternates business, 10 to 15% as sponsor capital for our alternates business, as that kind of continues to grow faster than what we had initially anticipated.
And one question more from a management perspective, Karan, what changes?
So right now, apart from the collaboration agreement, there's really no management change. So what we've done is we've set up what we're calling a coordination committee, really to look at the progress of the collaboration items. So senior leadership from our side, senior leadership from UBS's side would be on the coordination committee, and we would meet at periodic intervals to ensure that the synergy benefits which we set out for ourselves can come through very positively.
Karan, just wondering, is inorganic, is this an opportunity that presented itself because it's been there maybe for some while? Correct me if I'm wrong. and you've taken it because it came at the right values to you? Or is this the way that you grow the business faster?
To be honest, I would first look at the inputs. I think values and output, and then in everything we do, inputs have to be more important. And to be honest, I think, as I said earlier, things like client platform is an input. Okay, that's an input for our business. Ability to attract the right employees is an input to our business. And maintaining the right culture and things which are valuable to us and being able to give the right advice to our clients is an input for us. So I think these three are the inputs, and I believe all three are a big tick for our collaboration with UBS AG. And if the three inputs are there, I think the outputs kind of express themselves. So in a sense, the price honestly is an output of those inputs. So I not really a function of price. I think it's more a function of the time, the need for it, and the right inputs coming together.
Karan, just throwing in a macro question, but just trying to do that. When you did what you did back in 2008 or 2009, as the case may be, right? Did you foresee Indian wealth management industry to come the way it has, and for you to grow to the size that you have and do such a collaboration? And part two of my question, therefore, is from here, when almost everybody seems to believe that India is truly arrived, per capita moving up, number of millionaires, billionaires moving up. Where do you see this moving, let's say till 2030 or beyond that, as you can envisage?
No, I think the answer to the first question is not really a macro question. It's a very good question, though. I think, to be honest, the answer is no. Okay, there's no way we would have imagined, number one, the company being so large, number two, the industry being so large, and number three, also us playing such a large role in the industry, leave alone doing a collaboration with UBS. So I think in retrospect, all three things are a good positive thing. When you look back, we think good about it. Obviously, if I was to imagine it differently, I would have done a lot more things differently. But that's for me potentially another day. In coming back to your macro question, I think I'm very confident on the Indian markets. I think there are three things which will kind of really work well. I think first, obviously, the per capita income will continue to grow, and generally speaking, India's investment and savings culture is very, very strong. Generally, India is a commercially savvy market, so more often than not, most investors get what they are doing. Second, I think we are a phenomenally well-regulated market. I think SEBI, RBI, everybody put together has really been able to convert most of the units into a financial instrument. Most of it is regulated, and most importantly, most of it is in electronic form, where the ability to settle the trade is really something which is more or less bulletproof. So with this kind of a regulatory framework where settlement's not a problem, exchange is quite convenient. I think then the only thing really left to monitor is price risk and ensure that we are able to communicate to clients properly, and things and the right things kind of get offered to clients. So I'm very positive on that also. And therefore, coming to your fundamental question of the growth, I think therefore businesses which kind of continue to do the right set of things without kind of trying to overachieve, have the following opportunity, right? So I think, the markets itself grow at 8, 9, 10% a year. I think the GDP growth along with the growth in financial savings will add another 10 to 15% every year. So effectively, if we execute well, we've got a 9 to 10% growth in the broader assets you already have. You acquire another 10 to 15%. You can very clinically grow at 20-25%. And capital markets is a business which is very, very unique because out of the 25%, 40% of the growth in a sense is kind of coming by itself. And together with this, obviously, you can grow your number of clients which you service. Today, we only service around about 3,600 clients or 3,500 clients on the ultra high net worth side. My guess is the number of such families in India would be 40 or 1,000. So we have lots of inputs to grow on. I think the assets under advice being one, second is number of clients being the second, and third is geographical growth. And all of these three, in my mind, are definitely possible. And if you can continue to grow at that 20-25% clip, manage your costs well, manage your stakeholders well, which would include employees and clients, I think broadly speaking, businesses can grow at a clip of 15 to 20% a year.
Very interesting. Thanks so much, Karan. Been great pleasure speaking with you.
Yeah, and just congratulations on charting such a fabulous script in this wealth management piece that 361 has. Kudos, Karan, on that.
Thank you. Thanks to the team. Thank you. Yep. See you. Bye-bye.
Bye.
You broke it up well, but 6% higher, Harsh, now.
Correct. And interesting perspective there, Neeraj, from perspective that you have a US AG looking at an Indian company. UBS AG themselves are veterans in the industry of sorts, looking at an Indian company and valuing it at maybe 10% higher than what yesterday's close was. And thereafter putting in significant money behind the deal as well. So that's the other thing that really stands out. And joining us now, Sudeep Bandyopadhyay, Chairman, IndiTrade Capital, and Nilesh Jain, Head AVP Technical and Derivative Research at Centrum Broking. Sudeep, thanks for standing by very, very patiently. Let me come to you first with regard to 361. Not sure how much of that conversation you had a chance to listen in on, but give us your perspective. One is 361 in particular and this entire transaction that's played out. Stock is up 6% today. But outside of that, wealth management in India as a business, of course, related party of sorts, you being one of them. But what is your sense at this point? Is it a good time to enter some of the listed names?
Well, Harsha, I did catch a part of the conversation, and financialization of savings is happening in a big way in India, and the trend is irreversible. It's going to continue at a rapid pace in the near future. Yes, India is a saving nation, and that does help the cause. And because the financialization of savings is happening now, instead of money lying in bank accounts and under the pillows and all, things are moving to the financial market, whether it's in mutual fund or in the insurance products or in equity directly. I think that's a good news for the wealth managers. I would say 361 is in the right place at the right time, and so are some of their competitors. The opportunity is huge, and we are continuously adding more and more people in the HNI category in India, and that gives them a scope for expanding exponentially over the next many years to come. So yes, absolutely positive of this industry and 361 as well. Of course, you have to look at the valuation at which you are entering and try and enter at a valuation which is kind of a reasonable so that you can make your gains if you are buying the wealth management stocks which are listed. So to that extent, you need to do your diligence at the point of entry and things like that. But fundamentally, from a long-term perspective, this business looks fantastic.
Sudeep, so within capital markets, is it wealth management? Could it be AMCs? Could it be pipe companies, exchanges, or brokers? 4 or 5 buckets there. Which one looks the best, or a combination of all of these could do the trick?
Well, Neeraj, I think combination. As far as exchanges is concerned, I like MCX. I think in the commodity space, there is a lot of expansion is expected to happen and is going to happen. And MCX being the grabbing the market.
We have to cut across to JD Vance addressing the media.
All children at his beautiful home. I've been amazed by the ancient beauty of the architecture of India, by the richness of India's history and traditions, but also by India's laser-like focus on the future. And those things, I think this appreciation for history and tradition and this focus on the future is very much something that I think animates this country in 2025. Now, in other countries I visited, it sometimes feels like there's a flatness, a sameness, a desire to just be like everyone else in the world. But it's different here. There's a vitality to India, a sense of infinite possibility, of new homes to be built, new skylines to be raised, and lives to be enriched. And there's a pride in being Indian, a feeling of excitement about the days that lie ahead. Now, it's a striking contrast with too many in the West, where some in our leadership class seem stricken by self-doubt and even fear of the future. To them, humanity is always one bad decision away from catastrophe. The world will soon end, they tell us, because we're burning too much fuel, or making too many things, or having too many children. And so, rather than invest in the future, they too often retreat from it. Some of them pass laws that force their nations to use less power. They cancel nuclear and other energy generation facilities, even as their choices, the choices of these leaders, lead to more dependence on foreign adversaries. Meanwhile, their message to their friends, to countries like India, is to tell them that they are not allowed to grow. Well, President Trump rejects these failed ideas. He wants America to grow, he wants India to grow, and he wants to build the future with our partners all over the globe. And when I look at this audience, or when I visit this incredible country over these last couple of days, I see a people that will not be held back. Now, the most profound responsibility I believe that all of us have is not to ourselves, but to the next generation, to make sure we leave them with a better society than the one that our parents and our grandparents gave us. And this is the world that America seeks to create with you. We want to build a bright new world, one that's constantly innovating, one that's helping people to form families, making it easier to build, invest, and trade together in pursuit of common goals. Now, I believe that our nations have much to offer one another, and that's why we come to you as partners looking to strengthen our relationship. Now, we're not here to preach that you do things any one particular way. Too often in the past, Washington approached Prime Minister Modi with an attitude of preachiness, or even one of condescension. Prior administrations saw India as a source of low-cost labor on the one hand, even as they criticized the Prime Minister's government, arguably the most popular in the democratic world, and as I told Prime Minister Modi last night, he's got approval ratings that would make me jealous. But it wasn't just India. This attitude captured too much of our economic relationship with the rest of the world. So we shipped countless jobs overseas, and with them our capacity to make things, from furniture, appliances, and even weapons of war. We traded hard power for soft power, because with economic integration, we were told, would also come peace through sameness. Over time, we'd all assume the same sort of bland, secular, universal values, no matter where you lived. The world was flat after all. That was the thesis, and that was what they told us. And when that thesis proved false, or at least incomplete, leaders in the West took it upon themselves to flatten it by any means necessary. But many people across the world, and I think your country counts among them, they did not want to be flattened. Many were proud of where they came from, their way of life, the kind of jobs they worked, and the kind of jobs their parents worked before them. And that very much includes people in my own country, the United States of America. Now, some of you are aware of my own background. I actually didn't plan to talk about my background at all until last night at dinner while my children mostly behaved. We gave them an A- for behavior with the Prime Minister. The Prime Minister said, I have one request. I want you to talk a little bit about your background. And so I wanted to do that. For those of you who don't know anything about me, I wanted to talk about it. I come from, and I'm biased, the greatest state in the Union, the state of Ohio, a longtime manufacturing powerhouse in the United States of America. My home specifically is a place called Middletown. Now, it's not a massive city by any means. It's not Jaipur, but it's a decent-sized town and a place where people make things, which has been a point of pride in Middletown for generations. It's filled with families like my own, some of whom called us hillbillies, Americans who came down from the surrounding hills and mountains of West Virginia, Tennessee, and Kentucky to cities like Middletown in pursuit of the manufacturing jobs that were creating widespread prosperity for families all across America. They came to Middletown in search of what we call back home the American dream. In Middletown, my parents raised me. My grandparents raised me. They taught us to work hard. They taught me to study hard, and they taught me to love God and my country and always be good to your own. My granddad, who I called Papaw growing up, he typified that. Late into life, he worked as a steelmaker at the local mill, and I know India has a lot of those. Papal's job gave him a good wage, stable hours, and a generous pension. All that allowed him to support not just him and my grandmother, but his own daughter and grandkids with him. Now, by the time I came around, money was awfully tight, but he worked hard to make a good living for all of us. Now, I know Papal and Mama were grateful for the way of life their country made possible. Their generation bore witness to the formation of America's great middle class. And by creating an economy centered around production, around workers who build things, and around the value of their labor, our nation's leaders then transformed their country and made thousands of little middle towns possible.